all our CA final audit, whoever is reading from our GoTo notes. I hope you have observed this intro video. Wait, why are you trying to go to the next timestamp and skipping the video? Wait, don't be hurry. First watch the introduction. Very important introduction. This is most important. I will tell you something that you don't even know this. Please watch this intro and then go to the respective timestamp and watch the class happily. Okay, watch this intro first. You know, we totally have 46 standards. Totally we have 46 standards. One is quality control standard, 45 engagement standards. Out of this 45, we have 38 standards on auditing only. Out of this, 35 standards are up to 700 series, 800 series is 3 standards. Out of these 35 standards, many CA final students, they don't even know that these standards are not there in the syllabus. You know, like some students often message me, sir, in the GoTo notes, no, these standards are missing, sir. It's not missing. It's not there in the syllabus. First know that. Have you ever seen ICA book? You will never open ICA book. That's the problem. You open ICA book and then see what is there in the syllabus, what is not there in the syllabus. And something that is there in the syllabus, you don't even study. So first to know what is there in the syllabus. That's why whenever we are giving marathons or whenever we are giving EVO course students also, whenever we are giving some introduction to a topic, listen to it without skipping, so that you will not get this kind of stupid doubts. First one, what are the standards that we do not have in CA final at all? SCA 200, SCA 210. By the way, this is a list of standards that we have where I told students to scan here. If you scan in this, what you will find? This playlist which you are watching right now. Yes or no? In this playlist, what are all there? You know, CA final audit marathons were there. Some chapter wise marathons and all we uploaded. Now, this particular video you're watching, right? In this video, I have uploaded certain revision classes of CA Inter, which are nothing but these standards. Okay. Now, you know, let me show you. I ticked here, right? Something like 200, 210, 230, 265, 320, 330. Yes or no? These standards, like whatever highlighted with brown color, these were not at all there in CA final audit book. You open ICA book and check thoroughly. It is not there at all. They didn't even talk 1% also. They don't even give reference about these standards. Now the first question, should we read these standards from exam point of view? This is the common question which many students will have. What I recommend is one time at least get to know, brush up the concepts at least get to know what is there in these standards. That's why in the same video continuation, you see, you can find timestamps. 210 standard, that is nothing but our CA Inter nature, objective and scope of audit chapter. In CA Inter, this chapter is nothing but 200 standard. So the chapter revision is there in CA Inter, right? It is attached in this video. Then 210 terms of engagement. In CA Inter, we have a chapter called terms of engagement. That's nothing but 210 standard. In the same video timestamp you will find. 230 documentation. In CA Inter, we have a chapter called documentation. That revision is there attached in this video. 265, okay, deficiencies in internal control. In 265 standard syllabus is there in CA Inter, that we did revision in the revision class. The same thing is attached here. Now 320, 330, same CA Inter revision videos were there, which I did based on charts, which I did based on CA Inter chart. That revision, quick revision, attached in this particular video. Listen till the end this particular introduction, then you start watching them. And now coming to whatever highlighted with green color. What is this green color? This content is given in CA final audit. You have 5th chapter, 6th chapter, right? Audit evidence chapter in CA final audit. 6th chapter, completion and review. These 2 chapters were there, right? In those chapters, these standards were given as a single page diagrams. 500, one diagram. 501, one diagram. 505, one diagram. Okay, they're all given at a single page diagrams. But what I am doing here, you know, whatever I'm ticking here, 501, 510, 550, 560, 580, whatever I'm ticking right now, okay? And even this 520, 530, okay? Like ignore 570, because 570 I already covered in our CA final audit marathon part 1, which is part of audit report chapter. So I'm ignoring that. 570 is there in CA final gap chapter. Okay, that we will discuss later, not an issue. Audit strategy or gap chapter, something where somewhere it is there. Now, whatever I'm ticking here, S1 of 500 you can ignore, don't even have to touch it. 501, 505, 510, okay, 550, 560, 580 and 520, 530. For all these topic standards, I am giving you CA Inter revision video, because in CA Inter, these standards were discussed in depth. In CA final, they were discussed only brief. But in CA Inter, this 560, 580, everything is discussed very, very in depth. And definitely, I'm telling you, you need that in-depth knowledge, because that is the level at which MCQs are being asked. That is the level at which descriptive questions are tested from these standards. So point is simple. In CA final book, whatever the standards I've selected here, they were not given at all, or they were given only in a brief manner. But in exams, whatever highlighted in green color, especially this evidence leave it not required. Whatever highlighted with green color, these are all important in exam. You need to have a decent clarity on those standards. That's it. So with this entire whatever I have mentioned, QR code, scan QR code for certain standards, that is the same video which you are watching right now. Continue watching the timestamps. I hope you're clear. If at all you're not clear, once again watch this intro part timestamp again and then continue watching that. Okay, all the very best. Go ahead. Yes, let's begin the first chapter, nature, objective and scope of audit. In this, first I will directly discuss with respect to, what is an engagement. There is a topic called what is an engagement. What are the benefits of external audit engagement? Many a times in exam from this segment only they will ask. This is one segment. In the first initial chapter, this nature, objective and scope. There is another segment, principal aspects to be covered in audit. Scope of audit includes what? Scope of audit excludes what? And inherent limitations. In this chapter, these are generally important topics. Scope of audit, aspects to be covered in audit, inherent limitations in audit, and from 7th concept, whatever I'm showing here, completely important. Getting it? Now, what is the subject that we are learning? Audit. Actual subject name is auditing and ethics. Though we don't have ethics related syllabus much, we only have little bit in ethics chapter. Ethical principles only we have in our syllabus. So technically what we are learning is audit. But we as a chartered accountant can provide various types of services. We as a CA can provide various types of service. In that, one service is audit. We are not only doing audit. One of the service that we render, we call it as audit. Typically, whatever works that we provide, we call them as what? Whatever works we do, it is called as engagement. In a business, it is called as a contract. In profession, that too in our CA profession, we call them as what? Engagement. Engagement means what? Here they have given a meaning. Engagement refers to a formal agreement between the auditor and client. See, at many places the word auditor is used. Just because the word auditor is used, the work you are doing may not be audit. You are simply called as, generally your popular name is what? Auditor. We are called as auditors. That doesn't mean we are doing auditor. The moment you are a CA, you are generally referred as what? Auditor. But right now I'm doing teaching here. Getting it? Activity name is different. The person referred as is different. So in many standards, at many places the word auditor will be used. Actually there you are not actually doing audit service. You are doing some other work. But you are referred as what? Auditor. Just why I'm discussing this, you will get it. So whatever work we do, we simply call them as what? Engagement. Engagement is what? A formal agreement between auditor and client. What are all works we provide? What are all works that we do, they are broadly divided into two types. They are broadly divided into two types. Assurance engagement. What is it? Assurance engagement. Another one is what? Non-assurance engagement. Assurance engagement and non-assurance engagement. Whatever work you do, these are the two ways. Getting it? For example, now tell me what we thought in our fundamentals, or what you know about audit, definition of audit. Audit means opinion we will give. Audit means what? Opinion. Opinion, why? Why are we giving opinion? So that our report, our opinion will be used by some third party and he will take some financial decision. Correct? So indirectly, we are giving confidence to third parties. Yes or no? People, shareholders, they invested thousands of crore money in the company and they are not allowed inside the company. They don't know what is happening inside the company. They are all tensed. What is happening inside the company about their money? So we, on behalf of them, we went to the company, verified everything, top to bottom, 100% we verified, totally we verified, and then we are coming back and giving them opinion. Don't worry, everything is good, your money is safe. Indirectly we are giving that confidence to the users. Yes or no? That confidence that we are giving, right? And that confidence is called as assurance. That confidence is called as assurance. So if at all you are appointing me for giving you an assurance, that work is called as assurance engagement. Suppose if I am taking some work, for example, no, we know, right, auditors do IT returns filing, GST returns filing and all. Suppose, no, a client came to me, he just want me to file IT return, nothing else. He will give the data, he will give his income details and all. I will have to compute income tax as per income tax provisions, tax computation, and I will tell him how to pay the tax. He will pay the tax, then I will file the IT return. Is there any confidence I'm giving to anybody here? Nothing. Yes or no? This is a non-assurance engagement. What is this called as a non-assurance? Example, I'm just telling you. Getting it? Now, again, you can give assurance on historical financial information other than historical financial information. The auditor can give assurance on historical financial information other than historical financial. For example, other than historical financial means what? Other than historical financial means nothing but prospective financial information. In the recent Jan exam, this was only asked, what is a prospective financial information, where the focus is on. In a prospective financial information, where the focus is on, what level of assurance generally will be there in the prospective financial information. This question is what asked in Jan 25 exam. Getting it? Fine. Anyhow, so we give assurance on historical financials other than historical financial. Now again, historical financial information, no, we give two levels of assurance. We can give two levels of assurance. One assurance is called limited assurance, another assurance is called reasonable assurance. If you recollect, just we have seen objective of audit. In the objective of audit, what we understood, the auditor obtains reasonable assurance whether the financial statements are free from material misstatement. Yes or no? Reasonable assurance engagement. What is it called as? Reasonable assurance. What is a reasonable assurance? High level of assurance. Reasonable assurance is a high level of assurance, but not absolute assurance. Reasonable assurance is a high level, but not absolute. What is the reasonable assurance engagement? Audit. This is what we are learning in our subject. We are only learning one type of engagement. In our syllabus, we only have one type of engagement, that is audit, which is a reasonable assurance engagement, where we are giving assurance on historical financial statements. Tell me, we are giving audit report, right? We will give audit opinion, right? Are we giving opinion and report on future data, na past data, na? Past completed transactions, events, policies, balances, yes or no? On that we are giving report. Yes, that is reliable. No, they are not reliable. We are giving confidence to the people on the past financial data, and that is called as historical financial information. Now, on the historical, you can not only give audit, you also give review. You also give some, not only reasonable, sometimes you may give only limited assurance. Limited assurance example is what? Review. Limited assurance example is review engagement. We call it as, what is it called as? Review engagement. Now example, suppose I am appointed as an auditor for a listed company. Listed companies, every quarter they need to file financial information with SEBI. Quarterly financial results, we call them as. But I have not yet started the audit. How? They're asking my report. Sir, we want your audit report on the quarterly financials. Sir, I am recently appointed. Just 1 month ago I am appointed. I have not yet started the audit. How can I give audit? Reasonable assurance and all, not possible. Then company told me, sir, no. Don't give that little level of assurance. Just tell that nothing you found bad. Reasonable assurance is saying whether the financial statements are good or bad. Whereas review, I will simply say they are not bad. In a review, what I will say? They are not bad. Getting it? Because I don't know whether they are good or not. But I will briefly verify. I will logically see whether the balance sheet numbers, P&L numbers and all logically correct or not. In a review, we perform two types of procedures. Inquiry and analytical procedure. I hope you have heard of this. Inquiry and analytical procedure, you know it in audit evidence topic, you might have seen already. Now, whereas in audit, no, we do so many procedures: inquiry, inspection, observation, recalculation, reperformance, external confirmation, analytical procedure. So many we do in audit. So many types we will verify the data. Whereas in a review, we only inquire whether the data is correct or not. We only logically see whether the data is correct or not. When I logically see the numbers, no. When I logically see our company compared to last year, turnover increased, expense increased, profit also increased, everything is logical. I did not find anything suspicious. I will not go inside deep. I will briefly see analytically, is it correct or not? If everything seems correct, no, I will give opinion. No, sorry. I will give conclusion. What is it called as? I will express a conclusion. Nothing has come to my attention. How I will give? Nothing has come to my attention to say that the quarterly results are incorrect. Are they incorrect? To say they are incorrect, I did not have any evidence. I did not have any evidence to say that they are incorrect. Remember, on audit you must obtain sufficient appropriate evidence. Even in review also you must obtain sufficient. In audit you must obtain sufficient appropriate for reasonable level. Whereas in review you shall get sufficient appropriate level for a basic confidence, limited level of assurance. It is like something is better than nothing. Review is like something is better than nothing. Suppose if I saw a movie, it is fantastic, then I will say it is good to others. Suppose if it is not good, suppose it's okay, one time watch, then I will say it is not bad. Able to understand? Limited assurance is like not bad. Able to understand. So that is called as what? Review. Now, for audit, we have something called standards on auditing. For review, we have something called standards on review engagement. Then there is another assurance that I can provide. What assurance? Other than historical financial information, I can also provide assurance on not only historical, other than historical. For example, I can provide assurance on PFI, prospective financial information, or I can also give assurance on controls at the entity. Controls at the entity. If you recollect in 501, there is a service auditor report. There is a wordings used called service auditor report when the inventory is with third party. Yes or no? Obtain a service auditor report on internal control system implemented at third party relating to inventory. That is nothing but assurance audit report. That is nothing but assurance audit report. Don't worry, if at all you are not aware of it, we'll discuss in the SA 501 standard. Clear? So I can give assurance on PFI, prospective, or I can give assurance on control. Now let's talk about prospective financial information. What is a prospective financial information? Prospective financial information is financial information which is prospective, which is future oriented. In future, how much is my sale? In future, how much is my expense? In future, how much is my profit? About future. How can I calculate future accurately? We can't. Future data is calculated based on assumptions. In a PFI, what auditor will give assurance? You know, he will not give assurance on the information. He will give assurance on the assumptions. In a prospective financial information engagement, the auditor will give assurance on assumptions used to prepare PFI, whether these assumptions are reasonable or unreasonable. Whether these assumptions are reasonable. Company prepared future estimated financial statements. We call them as projections. We call them as forecast. The prospective financial information is called as a projection. It is either called as a forecast. The auditor will give assurance on assumptions used behind the forecast. Assumptions used behind the projection, whether these assumptions are reasonable or not, whether these assumptions are unreasonable. But tell me, they are at the end of the day assumptions only. Can I give high level of assurance on that? I cannot give high level of assurance. High level of assurance means what? Reasonable assurance. I cannot give high level of assurance on future financial information. So, but I am giving assurance, right? Sorry, but I am giving assurance, right, at the end of the day. Yes or no? On PFI only I am giving assurance, right? But I know that it is not a high level, right? So what level of assurance it is? Moderate level. Moderate level. MCQ, it is important. The level of assurance that we give on prospective financial information is moderate. The level of assurance that we give on in case of review, limited assurance. The level of assurance that I give in audit is reasonable, which is a high level. But can I give 100% assurance in audit? Impossible. It is not at all possible because we are having so many inherent limitations. Yes or no? There are so many inherent limitations. We'll come back to it later. Now, Look at, look at. So, simply whatever work that we are doing, we call them as what? Assurance engagements. Yes or no? So assurance engagements are various types. Yes or no? Assurance engagements are various types. What is an assurance engagement? In an assurance engagement, practitioner, nothing but we auditors. Yes or no? We provide conclusion. Why are we giving conclusion or something like that? To enhance confidence of users. Yes or no? We are giving them confidence. How are we giving them the confidence? By giving some report. We are giving some conclusion. Conclusion includes opinion. So how we will give? Through a report. Through a report. About what? About what we give conclusion? About evaluation of subject matter against criteria. Some subject matter is there. Some criteria is there. As per the criteria, subject matter prepared correctly or not, I will check and I will give my conclusion. Suppose in audit, no. In audit, no. Auditor is there. Client is there. Financial statements are there. Whether these financial statements are true and fair or not, I should give opinion. Correct? I should give opinion on whether the financial statements are true and fair. Financial statements is subject matter. How do I know whether financial statements are correctly prepared or not? Applicable financial reporting framework. I will check that. Whether the financial statements are prepared in accordance with applicable financial. Look at the objective. Auditor has to obtain reasonable assurance whether the financial statements are free from material misstatements and are prepared in accordance with applicable financial. You should check financial statements. Are they prepared in accordance with applicable framework? Means this is called as criteria. What you have to verify? Financials. That is called as subject matter. So in an audit, in an assurance, simply in an assurance, auditor will express a conclusion. Auditor will express a, practitioner will express a conclusion or opinion to enhance the confidence of the user by evaluating subject matter against criteria. Accordingly, in an assurance engagement, what elements are there? Totally 5 elements are there. 1, ultimately report we will give. Yes or no? Whatever we are giving confidence to the user. How do we give confidence to the user? By a report. That report will contains what? That report will contains the assurance. Nothing but conclusion. In case of audit, we give opinion. In case of review, we give conclusion. In case of assurance on PFI, we give conclusion. Able to understand? So the report will contain assurance. Yes or no? Ultimately, the written report is there, right? That is the outcome of the assurance engagement. Okay, in that report, how I will give this report? Based on my evidence. Based on my evidence, I verified no subject matter against criteria. I verified balance sheet, P&L, books of accounts, background data, all that. I spoke to the company management, all that. Finally, only I gave an opinion. So I gathered something called evidence, and that evidence is called as sufficient appropriate evidence. In order to give assurance to third party, first you must have that assurance. First you must get that confidence. How will I get the confidence? Only when I have evidence in my hand, I can give opinion on that. Only when I have evidence in my hand, I can talk about whether they are right or wrong. Yes or no? The practitioner will obtain sufficient appropriate evidence to form conclusion, to form opinion. Sufficiency is a quantity, appropriateness is a quality. We have a chapter called audit evidence. There we will discuss about quantity, quality, all that. Getting it? Next, next in assurance engagement, 3 parties will be there. Who are they? Practitioner. First, I am there. Now tell me, I will do what? Audit of financials. In case of audit, what I will do? Audit of financials. I'll verify financials. Who will prepare the financials? Management. They are responsible, right? We call them as a responsible party. Now I prepare now management will prepare financials. I will do the audit. I will verify the financial statements. Then finally, I will give a written report. That report is used by users. They are the third party, intended users. They are called as what? Intended users. They are nothing but they use this assurance report to make the decisions. And remember, audit relates to historical financial information, while practitioner can also offer assurance on non-historical. Tell me, as I already told you, we can give assurance not only on historical, we can also give assurance on other than historical. In audit, we give assurance on historical. In other than audit, we can also give assurance on other than. So as a practitioner, as an auditor, as a CA, you can provide assurance on historical financials, you can provide assurance on other than. On historical financials, you can provide reasonable assurance, limited assurance. Reasonable assurance is called as audit, limited assurance is called as review. Yes or no? Subject matter means what? Information which is examined by practitioner, that information which auditor verified ultimately. Yes or no? That is called as subject matter. Now when you verify, no, you gather some evidences and all, that is called as sufficient appropriate evidence. What you will verify? You will verify financial statements. Yes or no? For example, in audit you verify financial information, books, accounts, all that you verify. With what you will compare? You will compare these financial statements with something called rules and regulations, benchmarks. You will compare with the benchmarks. You will compare the balance sheet with accounting standard. You will compare the balance sheet with schedule 3, whether they are prepared as per schedule 3, they are prepared as per accounting standard. Benchmark. So benchmarks are nothing but suitable criteria. Benchmarks are nothing but criteria which is used to evaluate the subject matter. 5 more minutes. Okay, then now I told you audit, now assurance. Now what is assurance engagement? What is element of assurance engagement? It is over. So what is the purpose of assurance engagement? You will give an opinion. Yes or no? Where users and all will make confident decisions based on your opinion, because they know very well the chance of incorrect information in the financials is reduced because you verified them. So in the balance sheet P&L, is there any incorrect information? The chance is reduced a lot. Yes or no? Now I told, right, again, assurance can be on historical financial, other than historical. On historical you can give 2 level of assurance: reasonable, limited. Reasonable assurance is called as audit, limited assurance is called as review. Audit provides reasonable, review provides limited, which is a lower level. Review means what? Audit means what? In audit, no. In review, no. First of all, only few procedures I will perform to obtain evidence. Few procedures means what? Inquiry, analytical procedure only I will perform. I will not perform anything else. Very briefly I will check. Whereas in audit, I will do detailed audit procedures. Detailed procedures I will perform. Like in audit, no, we perform in audit inquiry, inspection, external confirmation, recalculation, reperformance, analytical procedure, observation, physical verification. So many I will do in audit. Now, what is review? 2400 series is the standard we have in CA final. We don't have in CA inter. In CA inter, we only have a discussion on meaning of review. Now, what is the relationship? Both are dealing with historical only, but audit provides reasonable assurance, review provides limited assurance. Like, what is the difference between reasonable and limited? Reasonable is a high level of assurance, limited assurance is a lower level of assurance. Now, whereas in audit, we do elaborate and extensive procedure: inquiry, inspection, analytical, recalculation, reperformance, observation, all that. Whereas in review, we perform few procedures when compared to reasonable assurance. Like inquiry, analytical only we perform. These examples not there in I say that I gave you to make you understand clearly. Then, in in audit, we draw reasonable conclusion, which is a high level clarity. Whereas in review, we draw limited conclusions. We also don't know in depth about balance sheet P&L, but based on whatever I saw, nothing I found wrong. That's what I simply tell to the people also. Example, audit is an example of reasonable assurance engagement. Review is an example of limited assurance engagement. That's it. We completed PFI, we completed audit, we completed review. You see how quick we are going. Able to understand? That too without compromising any part of the explanation. Understood or not? That's it. We'll continue in the next session the rest of the topic. Yeah, we'll continue the pending discussion in the nature, objective and scope of audit. Fundamentals is completed. NOS major part is also completed. Now we are going to discuss about prospective financial information, right? So I already told engagements are various types. Review engagement, review is a limited assurance engagement, audit is a reasonable assurance engagement, and the differences we already seen. Yes or no? Now let's look at PFI, prospective financial information. Prospective means what? It refers to financial information about future events and actions. Financial information about future events and actions based on assumptions. Based on assumptions. And that is called, PFI, prospective financial information, which is 2 types. Either it can be a forecast or it can be a projection or a combination of both. Like 1 year forecast, future, upcoming prospective information, 1 year forecast, 4 years projection, like that companies do. Generally, forecast is a best estimate assumption. Forecast is based on best estimate assumption. Projection, we call it as hypothetical assumption. Projection is based on hypothetical assumption. Forecast is a best estimate. Forecast is more reliable than projection. Simple. But remember, both are at the end of the day regarding future. Since at the end of the day both are regarding future, can auditor give reasonable assurance on that? We can't. We can only give a moderate level of assurance. That too, I can give assurance on what? About the information, about the assumption. Assumption. I can only give my opinion. Sorry. I can only give my conclusion. I can only give my conclusion on, the assumptions used by the management. Are they not unreasonable? Are they not unreasonable? Negative form of basic level of assurance, limited assurance. Able to understand? Instead of calling it as limited assurance, we are calling here it as moderate assurance. The technical term for prospective financial information is moderate. Now, what is the difference between historical? Historical reflects past events and circumstances, whereas prospective is about future events and circumstances, conditions based on assumptions. Historical is rooted in past. Prospective focuses on future. In prospective, the practitioner ensures that management assumptions are not unreasonable. Nothing but we need to ensure management assumptions are reasonable. Information is properly presented based on assumptions. Whatever the information they showed, forecast, projection, whatever, is it based on assumptions correctly calculated or not? We just check that. We never check on the information, whether the information is right or not, whether sales target achievable or not. That and all we are not bothered. Yes or no? All material assumptions used by the management must be disclosed in the prospective financial information. And remember, future oriented. So that itself is a biggest limitation. Correct? So evidence may be there on the assumptions. Now, assumptions reasonable, unreasonable, you may have an evidence, but the assumption itself is future oriented. Correct? Therefore, you cannot confirm whether results will be actually achieved or not. So that's why, how do we give opinion? How do we give conclusion? We express a conclusion. Nothing has come to my attention to say that assumptions are not unreasonable. Are they unreasonable? I am not saying they are reasonable. I am saying nothing has come to my attention to say that they are unreasonable. Are they wrong? To say that they are wrong, I don't have anything in my hand. Are you getting it? I did not see any data to say they are wrong. I am not saying they are right. I am not saying they're good. I am not saying they're reasonable. I am saying to say they are unreasonable, I don't have any information. So, absence of evidence against to it. Getting it? I'm not saying that they're wrong. Able to understand? That's why it's a negative form of assurance. It's a negative form of assurance. It's a limited assurance. But the technical word for prospective is moderate assurance. Technically, if someone asks you, sir, what is the difference between moderate assurance and limited assurance? They both are same. Honestly speaking, they both are same. Even you see in review, nothing has come to my attention that causes us to believe that the financial statements are not true and fair. That's how the wordings in a review. So there the same phrasing, here also same phrasing. Both are limited assurance only, or both are moderate only. But to differentiate, in review we use the word limited assurance. In prospective we use the word moderate assurance. That's it. Then there are something called qualities of auditor. Auditor must have certain qualities: tact, firmness, discretion, reliability. Auditor must have a high level of culture, high integrity. All the basic human qualities are required for the auditor. You must having an expert knowledge on accounting, technique, all that. Yes or no? That's it. Then remember, the whatever types of works we do, we simply call them as what? Engagement. The engagements that we do are broadly two types: assurance and non-assurance. Assurance is again two types: historical financial information other than historical. On historical financial information, what you give is reasonable and limited, whereas other than historical, prospective, moderate level. Remaining services are called as non-assurance services, non-assurance engagement. Non-assurance engagement, one of the standard applicable is SRS, standards on related services. Totally 4 standards we have: standards on auditing, historical, standards on review, that is also historical. Both are historical financial. Assurance engagement on other than audit and review of historical. This is nothing but what? It's an assurance engagement, but not audit, but not review. Then what is it? It is about PFI, yes or no? Or agreed upon procedures, compilation, related services engagement. The auditor can even take up agreed upon compilation. What is agreed upon? Company will call us, sir, can you just do physical counting and then tell us, reconcile with our record and then go? Nothing. Your duty is please come. do physical verification. Say records and books, records, physical stock matching or not. Just give a report and then go. That's it. We don't want any assurance, sir. By the way, we are not going to use your report for any third party purpose. Nothing. Please come. We don't have employees. Okay, we are tight in employees. We have a go down in so and so location. You go there, do physical counting, give a report on the physical count. That's it. We are not going to use it for any third party purpose. 2, sir, please come us. Talk to all our debtors, talk to all our creditors, get a confirmation from them. Just agreed upon procedure. You and me agree upon some procedure, and that's called agreed upon. 2, compilation. What is a compilation services? Sir, we don't know how to prepare financial statements. Our auditor is saying we are the responsible person to prepare financial statements as per applicable financial reporting framework, but we don't know how to prepare. Please, you come and prepare financial statements for us. Please, you come compile balance sheet, P&L for us. We will give this balance sheet P&L to our auditor, statutory auditor. Are you getting it? Can the same person do compilation and audit? No, prohibited. You should not involve in preparation of books of accounts. You should not involve in preparation of financials. That's responsibility of management. They may take help of another chartered accountant. Yes or no? But he should not be the auditor of the company. That's compilation engagement. Both agreed upon procedure, compilation engagement, both are called as what? Related service engagement. Are you clear? Next, what is the purpose of engagement quality control standard? Why all these standards are very simple? High quality standards, they provide guidance on audits, review, assurance, related services. Yes or no? What are standards on auditing? They apply to audit of financial statements. They set high quality benchmarks for audit. Like these standards talks about so many issues. Remember, we have already seen documentation standard is there, audit strategy planning standard is there, 500 evidence standard is there. So many standards. They talk about objectives, they talk about documentation, they talk about planning, they talk about risk assessment, sampling, evidence, so many examples of standards on auditing. 4 examples. You rate any whatever the examples you like. Then standards on review. They apply to review of financial statements. Yes or no? They provide limited assurance, which is lower than audit. In review, we only do few procedures. Although it's a limited assurance, auditor still has to obtain sufficient appropriate. We have 2 standards, 2400, 2410. Only 2 standards we have. 1, engagements to review historical financial information. Another one, review of interim financial information performed by independent. The second standard is applicable for listed entities mainly, where listed company auditor along with annual audit report, he should also give a review report on quarterly financial results. You see, review of interim, which is quarterly, half yearly, whatever. By whom? Independent auditor. Same auditor only performing review also. Able to understand. Next, both standards on auditing and standards on review, they only apply to historical financial information. Then we have another set of standards called standards on assurance. This is applicable for what? This is dealing with subject matter other than historical information. They do not include audit and review. You know, in PF we give assurance on non-financial matters such as internal controls also. That is also there. In assurance other than historical. In assurance other than historical, we give assurance on one is prospective financial information. We can also give assurance on other than financial information. Example for other than financial controls. For example, there is a standard called 3400, examination of PFI. 3420, examination of pro forma financial information included in prospectus. 3420. There is another standard called 3402. Engage assurance report on controls at service organization. Assurance report on controls at service organization. Service auditor. Remember in 501 at one place we have seen service auditor. Yes or no? Assurance report. That is 3402. We have a parallel auditing standard called 402. Responsibilities of the auditor of an entity using service organization. Okay, we don't have both in our syllabus entirely. We don't have just example. It is there. Are you clear? Then related. What is related service? Related services, they apply to engagements which involve agreed upon procedures. They also apply to compilation. What is agreed upon procedure? It is an engagement. Some specific procedure will be performed by the practitioner. Yes or no? Accounts payable, receivable, purchase, related party, something which management will request you, you do that work. Compilation. Compilation means what? Preparation and presentation of historical information. For that, what are you doing? You are assisting the management. You are helping the management in preparing and presenting financial statements with without providing assurance. Remember, it's a non-assurance engagement. You don't provide any type of assurance. The practitioner issues a report stating that no opinion is expressed. Easy or not? Yes or no? What are the examples? 4400, one standard. 4410, two standards. We have only two. One is engagement to perform agreed upon procedure regarding financial information. Then compilation engagement. Apart from that, we have one more standard called quality control standard. Remember, I told you in one of our regular class also we spoke 46 standards we have. Totally we have 46 standards. Okay, one is quality control standard, remaining 45 are engagement standards. Yes or no? In that engagement, quality control, this standard is applicable for audit firms. Standard on quality control is applicable for firms. Guidance on a firm's responsibilities for quality control system. Quality control where? Any work you do. What works I do? I do audit, I do review, or I provide some assurance, or I provide related service. Quality control for firms that are performing audit, review of historical information, other assurance and related services. Simple. Yes or no? What SQC 1 says? Firms has to establish quality control system. Remember, I told quality control system also. Pizza, Domino's Pizza, they need to establish policies and procedures. You must have a standard operating practices on how do you work all that. Anyhow, once we start quality control revision, that time, no, I will discuss. SQC revision we have. So that time I will discuss. Getting it? What is the objective? Objective is very simple. Ensure quality control system within firm. No, whatever the firm we are running, audit firm, no, quality control system guarantees compliance with the standards, issuing our reports appropriate. At the end of the day, whatever work you do, it must be as per law. Whatever report you are issuing, it must be appropriate. Engagement risk must be low. What is it? Engagement risk must be low. What is engagement risk? I am giving a report. No, my report should not go wrong. My report should not go wrong because I give report based on sampling. My report should not be abruptly go wrong. So what is engagement risk? What is audit risk? That and all we will discuss in risk assessment topic later. Clear? That's it. Then this SQC apply for all services which are covered by engagement. So whatever 45 standards you're doing, right? In addition to that, SQC is applicable. They ensure proper quality of services. Why standards? Okay, understood. Whatever works we do, we call it as engagement. The types of works we do is assurance, non-assurance. Assurance again, historical, other than historical. Review, audit, other assurance related, all that we understood. Corresponding standards also we understood. What is the need of these standards? What is the need? Very simple. What is the need of this standard? They ensure audits are conducted against benchmarks along with the global practices. Quality of financial reporting, improve quality. This is accounting standard objective. Quality of financial reporting. Here the question is normally standards benefit is what? Then they equip professional accountants with necessary, because I am just a CA. I don't know what to do in audit exactly. Yes or no? Standards will guide me what to do exactly, how to do exactly. They ensure audit quality. So what is the duties of professional accountants like you and me with respect to these standards? What is our duty? We have to comply. Professional accountants must follow standards in their engagement. Suppose sometimes some standard, some procedure is there that may not be suitable for you. At that time, what you should do? They must document how alternative procedure you performed. No, that helped, that achieved the standard objective. See, at the end of the day, standards are saying you must obtain sufficient appropriate evidence. Whatever you do, you must obtain evidence. Standard tells you some procedures also sometimes how to get the evidence. If you feel that procedure is not suitable, no, you might have followed some other procedure, right? You should document how other procedure you followed that is not recommended in the standard, how that achieved objective of the standard, you must document. Clear? Reason for the departure also you must document. Remember, just because you are giving disclosure in the audit report that I didn't follow so and so rule, so and so procedure I didn't follow, you're giving a disclosure, does it mean the standard is exempt for you? Standard is still applicable. Exceptionally rare scenario. Sometimes whatever the procedure given in the standard may not be usable for you. Clear? Next, we have few more topics in this chapter. Scope of audit, principal aspects to be covered in audit, inherent limitations in the audit. Once we complete this, it will be over. Correct? Next, who appoints the auditor? By the way, for companies, no, auditor is appointed by members at AGM. For government companies, no, C&AG will appoint the auditor. For partnership firms, LLPs, partners will appoint. For government authorities, the respective law or regulation will take care. To whom the audit report is to be submitted? Companies, no, shareholders, firms, no, part report revision will be discussing in depth of how to prepare the audit report, to whom the audit report has to be addressed, all that. Next, is audit mandatory? Always? No, it's not mandatory for everybody. Only for a company, LLP, respective act says audit is mandatory. LLP also, small LLP audit is not mandatory. LLP whose turnover is less than 40 lakh, whose capital contribution total is less than 25 lakh. If both of them are satisfied, audit is not mandatory. If any one of them are failed, audit becomes mandatory for the LLP. We call them as small LLP. We call them as small. Actually in LLP they didn't use the word small and all. We simply call them as what? Small. I mean, we are, for the sake of convenience, we call them as small LLP. They're exempted. But 40 lakhs turnover across, mandatory. Company, every company, 1% company, small company, private limited, public company, every company audit is mandatory. What about a sole proprietor? There is no law. What about partnership firm? The law is silent on audit. Society tax, Societies Act says audit is compulsory. Multi-state corporate society, the act says audit is compulsory. State Bank of India, SBI Act says audit is compulsory. Yes or no? Not every type of organization audit is compulsory, but some entities, no, even though audit is not applicable to them, they voluntarily go for audit, and that audit is called as voluntary audit. And remember 44AB in the income tax, 44 section 44AB, 35AD, 35D, 80JJAA, 80QQB, 80RRB, in all these sections, no, audit is compulsory. In all these sections, audit is compulsory. If audit is compulsory under a law, for that reason you are appointing auditor. That is called statutory audit, mandatory audit. You are voluntarily appointing even though there is no legal requirement. That is called voluntary audit. Yes or no? That's it. Easy. You take care of this. Then benefits of audit, you read on your own. Nothing is there inside that. So what is an engagement? Engagement is nothing but a formal agreement between the auditor and client. It contains list of services to be provided. Now the famous engagement is what? External audit engagement. What is external audit engagement purpose? To increase confidence of the users. Yes or no? For example, in India, companies are required to get audited by external auditor. Non-corporate entities may choose auditor for their own advantages. That's it. Next, we have limitations in audit. We have something called limitations. Remember, objective. What is the objective of the auditor? The objective of the auditor is to obtain reasonable assurance whether financial statements are free from material misstatements. Reasonable assurance. Why reasonable? Why can't you get absolute assurance? Look, balance sheet P&L, the financial statements are so big, transactions are so big. Imagine a company like Reliance Industries Limited, 10 lakh crore is the consolidated turnover. The consolidated turnover of the company is close to 8 to 10 lakh crore. Coming from multiple businesses, coming from multiple stores, retail stores, petroleum, so many is there. Revenue itself, 100% if you want to verify, it may take 20 years. 100% of the revenue if you want to verify, 20. When you will verify expenditure, when you will verify payroll, when you will verify in audit, we don't do audit 100%. We only do sampling basis. That's why we cannot get absolute assurance. Sir, if absolute assurance is not there, then why audit? Very simple. Something is better than nothing. Are you getting it? But we do audit very scientifically by using sampling, scientific statistical technique. We randomly pick the sample in such a way, if any frauds and errors are also there, can be easily detected. In such a way we do audit. But in spite of we do audit so scientifically, in spite you do whatever the way, there are still limitations. You can't discover each and every fraud. You can't discover each and every error. The opinion you are giving, right? Everything is true and fair. Suppose I'm giving on a company, everything is true and fair. I told everything is true and fair. That may not be in reality. Yes or no? Your opinion might go wrong. Yes or no? But at the end of the day, we have seen in documentation chapter, in the upcoming revision, I will tell you, with my documentation, with my evidence which I collected, if I am able to prove to the people that I did my audit genuinely, even though you did audit genuinely, if still some frauds were not discovered, you will not be punishable. Yes or no? Fine. Why we can only give reasonable? Why can't we give absolute assurance? Inherent limitations. So the audit process has some limitations, correct? Now, what are the limitations? First limitation, financial reporting itself is limitation. See, I have to give opinion on the balance sheet P&L, right? That itself has a limitation. That itself is not 100% true. Why? Management will prepare financial statements. Yes or no? They make so many judgments which are subjective, which are having some degree of uncertainty. Uncertainty is that they're not accurate. Yes or no? For example, companies know some purchase bills, controls and all, they might not follow properly. Yes or no? So these are all limitations. So management is responsible for financials. Management is responsible for internal controls, and these controls itself might have some limitations. Company top management told people be careful in everything, but they are doing frauds. What to do? Yes or no? They are doing frauds. They are hiding the frauds. Yes or no? So books of accounts, balance sheet, P&L itself has a limitation. They themselves are not 100% correct because they involve some judgments, assumptions, estimates which are subjective in nature. Able to understand? Financial reporting itself is a limitation. Obviously for audit also it is a limitation for the auditor also. Second limitation, nature of audit procedure. The way we do audit, that itself have a limitation. In audit, the auditor, we generally, what we do, the auditor obtains evidence by audit procedures. Yes or no? We give opinion based on sample, but that's a practical limitation for us. Sampling itself is a practical. We cannot verify 100%. We can only verify financial statements based on sample, and we will give our opinion based on sample. Why sample? Why can't you verify 100? Practically not possible. That's a practical limitation. In exam they will ask you what is a practical limit. Nature of audit procedure is suffering from certain limitations. What are the two types of limitations? Give example for each. Practical limitation, legal limitation. Another limitation is what? Management, they don't provide complete information to me. I cannot force them. If not provided, I can only report it to people. I can't force them. That's a legal limitation. Yes or no? Sometimes management might be dishonest. Frauds might be conducted by sophisticated schemes, fabricated documents. I may not discover that. Yes or no? Related party transactions. One more thing is what? Related. Company can enter into paper transactions, dummy, fictitious transactions. Yes or no? The relationships and all, the company relationships, related party transactions, we can't discover. We will discuss 550. There is a standard called 550 on related party. We will discuss there. And remember, what we are doing is audit. We are not doing investigation. So we can only obtain reasonable assurance. We cannot obtain absolute. In investigation, we get evidence conclusive in nature. Remember, there are totally 3 types of evidences based on the satisfaction level. Getting it? 1, prima facie evidence. Persuasive. What is it? Persuasive evidence. Conclusive evidence. In audit, we get only persuasive in nature. Persuasive means what? Convincing. By looking at purchase document, I will convince that purchase is true. By looking at a sale invoice, delivery challan, e-way bill, I convince that sale is there. But in reality, they are all fabricated documents. Who knows? I convince based on the document. If the document is fabricated for completely fictitious, it is impossible for me to discover. Able to understand. Next, timeliness of information. The relevance of information decreases over time. Auditor cannot verify every matter in detail. Yes or no? So you must always you must always strike balance between reliability of information and cost of obtaining. For example, sometimes we may take last year data itself for the purpose of audit. Future events. Remember, company prepared financial statements using going concern assumption. Going concern means what? About near future. 1 year the company don't have any problem, like that they said. But I don't know. In reality, in the next month only company might shut down if something went wrong against the company. Yes or no? So future events may adversely affect the entity's ability to continue. Some new business model, unforeseen event, all this causes the company business to cease operations. These are all inherent limitations. Nature of financial reporting, nature of audit procedure. Audit is not an investigation. Relevance of information over time, future events. Able to understand? That's it. Then, what are various aspects to be covered in audit? First we will see what is the scope of audit. Scope of audit means, scope means what? Scope means, okay, you see, scope refers to range or reach of something. The purpose of audit is ultimately to increase the confidence of user. How we can increase the confidence of user? By expressing opinion. How, what we check? Whether financial reporting framework followed by the management, is it acceptable or not? I will check yes or no. Scope includes. First I will discuss scope excludes. What we are not supposed to do. Remember, something that requires competence beyond our capability, something that requires competence beyond our capability, we are not responsible to do. Remember, auditor is not expected to perform tasks outside their competence. For example, machinery physically there or not, I went and saw. Condition of the machinery, I don't know. For that I need to call expert only. Yes or no? Whether impairment happened or not in a machinery, whether impairment happened or not in a building, the value, recoverable value, realizable value, I may not be the right person to decide. I have to call expert. I am not an expert in authentication of documents. I don't know whether a document is genuinely original or duplicate. You know what? Carbon testing they will do. Carbon dating something. Carbon dating or carbon testing something they do. You know, by doing a carbon testing, they can tell you which year it was actually manufactured approximately. By just suppose you give this pen to them, for example, okay, they do a carbon testing on this and they will tell you when this was manufactured approximately, almost with 90% accuracy. Getting it? You know, like many stones and all, they will be discovering some stones, so archaeological, they say 2000 years old, 5000 years old. How? That's called carbon testing. Able to understand? That's it. Okay. Now, audit is not an official. Tell me, can auditor tell that? Can auditor? Suppose no company, no, they purchased some machinery, some archaeological collection, painting they purchased, okay, to display in their particular art gallery. The company is running some art galleries. So in the art gallery, they purchased one painting. They purchased that painting by paying 5 crore. When I saw, it was like a spitting on wall. So that's how the painting looks like. General, most of the paintings like that only. Yes or no? It was a very abstract painting, something they told, for example. So they sticked it to the wall, okay, and they're saying 5 crore is a paint cost. And when I asked management, what is this? Who painted this? It was painted by so and so popular painter, sir. Who died 500 years ago. Who died 500 years ago? Okay, for example. So whether that painting is 500 years back or not, how do I know? Able to understand? Management might do fraud, no, in the name of this. Who knows? So audit and investigation are different. Investigation involves what? Detailed examination. Yes or no? So objective of audit is very simple. Reasonable assurance whether financial statements are free from MMS. Many a times they will ask this question. Scope of audit. Write about scope of audit and what is not included in scope of audit. They will ask you meaning and they will ask you exclusions. Activities beyond competence of the auditor. Auditor cannot do authentication of documents. The audit is not an official investigation. Objective is to obtain reasonable assurance. Then what is included in scope of audit? We have to cover all aspects of the entity. What do you mean by all aspects of the entity? We will discuss in the previous question. What are the principal aspects to be covered in audit? You see, aspects to be covered. What do you mean by aspects? You should cover all aspects, right? What do you mean by aspects to be covered in audit? We should check whether financials are matching with books of accounts. Books of accounts means what? They are supported by journal entries. No, whether journal entries are supported by bills, vouchers, proper evidence. See that no omissions are there. No duplications are there, no fictitious entries. You must ensure that there are no omissions, no duplications. Information presented must be clear and unambiguous. You must ensure that amounts, classification, presentation, disclosure are as per applicable financial reporting framework, and financial statements are presenting true and fair view. So what you will do in audit, if somebody asks you, I do all these aspects. I cover all these aspects. I will ensure books of accounts are matching. I mean, books of accounts and financials are agreeing. I ensure books of accounts are having supporting documents. I ensure there are no duplications, omissions and all. I ensure information present is clear. I ensure accounting standards are compliant. I ensure financial statements are true and fair. All aspects I should cover. Yes or no? Next, you see, all aspects. Another one. I get information, right, about books, documents, bills and all. I need to ensure that they are reliable and I need to obtain sufficient evidence before I give opinion. So scope of audit include obtaining reliability of information, obtaining sufficient information. Sir, what is reliability? What is sufficiency? We will discuss in 500 revision. We have a chapter called 6th chapter audit evidence. Inside that first topic is 500, which talks about audit evidence. Inside that there is a in-depth discussion on reliability, relevance, sufficiency, appropriateness. So much is there. Clear? All of you. Proper disclosure of financial. By the way, you know what? Yesterday results came. Jan 25. Okay. Many students failed in group 2 only because of audit. Many students failed in group 2 only because of audit. Getting it? In costing, FM and all, people got 70, 80 easily. Getting it? But audit is a paper where many got, failed. Getting it? Generally, every attempt we get 80 plus so many marks. This time 1 or 2 only. 68 only we got one of the student. 60 plus only we got this time many. Because the paper was extreme tough, I told you. In fact, in our regular class, we solved the entire paper. It was not so tough. Technically, it is not tough. It is there. Every point is there in the ICA book only. No question will be asked in the exam beyond ICA book. You will not find a single question beyond ICA book. So whatever the book you are following, you should ensure it is 100% ICA coverage or not. And our book, that what we are reading here, is 100% ICA coverage. If you understand entire this conceptually 100%, you can do really well. And I even posted a video on the result. Like many students, close to 150 students messaged. Getting it? Still, there are so many 100. I need to just open and then see. Okay. So I made a video. Almost 70 to 80% of the students told about 3/4 strategy. 3/4 strategy. Audit, again, they all qualified in audit, I'm telling you. 3/4 strategy is #1 strategy, I'm telling you. What is 3/4 strategy? Come on, you're attempting 80, 90 marks of the paper. Obviously, you'll qualify. Yes or no? 3/4 syllabus means, is it small? 3/4 means what again? We have in CA Inter 11 chapters. Any 2 to 3 chapters pick up. Keep aside. What I told you to pick up and keep it aside. 520 standard, 530 standard, risk assessment and internal control, items of financial statements. Don't touch them. First finish rest of the chapters 100%. Become 100% confident. Any question comes from that, you can answer well. Then in such a case, whether paper is tough or difficult or easy, that doesn't matter for you. See, by default, you are having 14 marks choice. Items of financial statements, 14 marks. That will never come in the compulsory question. For classes purpose, you listen everything. Yes or no? For MCQ purpose, you listen everything. But for revision purpose, you can take items of financial choice. Yes or no? 14, remaining 100 are there. So these two topics, 530, 520, risk assessment, put together how many you'll get? Maximum 15 versus against 20. 80 marks of the paper is in your hand, right? Yesterday one student messaged, he wrote for 65, got 44 in audit. He qualified. Perfection is important. Perfection is important. It's not, there are many students who wrote 105, 110 also, got 11, 12 marks. How many marks you are attempting is not the matter. Perfectly how many marks you are attempting is what important. In every chapter, C category questions will be there. Never do that analysis. That's a dangerous approach. In every chapter, C category topic, ignore. A category, B category, I will cover. Never do that. You will fail pakka. Getting it? Success rate is very, very low in that. Because what if Jan exam, B category, C category is what majorly tested. What will happen if at all that is tested in every chapter? You are gone. Instead of that, see, C category, how much syllabus they occupy, 25%. C category syllabus occupies how much, 25% out of 100. I am also asking you want to reduce C category, you want to avoid C category questions because you can't cover 100% syllabus. For example, I am also telling you 25% syllabus, keep it aside, but not in each and every chapter itself. Will ICA ask you on items of financials 40 marks, 50 marks? They can't. These 3 topics, small topics, yes or no? These 3 topics, hardly 25 to 30 marks. You keep them aside. First become perfect in all other topics. Believe me, you can score exemptions. That's it. Clear all of you? Fine. And one more point that I need to cover in audit is what scope of audit also includes what? I need to verify whether financial statements are disclosing properly, whether disclosure of information is properly, whether transactions are summarized properly, transactions, events and management judgments, are they summarized properly, whether management judgments are appropriate, accounting policies are appropriate, whether these selected accounting policies are applied consistently, yes or no. And the auditor has to understand that financials are based on historical, nothing but based on past economics and events. So scope of audit includes what? Scope of audit, you must cover all aspects. You must verify reliability and sufficiency. You must verify proper disclosure. Sometimes in exam only this itself can be asked as a 4 marks or 5 marks question. One of the important aspect the auditor is covering is disclosure. The directors of the company are opposing that it is not the auditor duty to verify disclosure. You should write disclosure point and you should link with the question which they are asking. Are you clear? That's it. So principal aspects to be covered in audit, everything is over, right? What is reasonable assurance? Reasonable assurance is a high level of assurance, but not a complete guarantee. Yes or no? Audit of financial statements is conducted by auditor. The auditor only gives reasonable assurance. We remember misstatements can arise from fraud or error. Ultimately, what auditor do is he will give opinion. As per standards on auditing, he will do the audit and give opinion based on findings. That's it. This is objective of the auditor. Remember, this entire chapter is nothing but first standard 200. This entire chapter is developed based on what? 200 standard and preface to standards. There is a pronouncement book in ICI. Okay, pronouncement. You don't have in the syllabus, don't worry, which talks about standards. Before starting the first standard, there is something called preface. That preface and 200 standard. Based on these two, this entire chapter is developed. So, what is nature of auditing? Audit process contains independence. Yes or no? What is the nature of financial information? Nature of financial information may be profit oriented, non-profit oriented, bigger or smaller, doesn't matter. The purpose of objective of audit is what? To express opinion. Purpose is what? To enhance the confidence of the users. This is what we are already discussed. Yes or no? That's it. Nature, objective and scope of audit is over. What is the relationship between audit and other disciplines? You please read later. Advantages of audit you read later on your own. So some 2 or 3 small topics only kept pending. Rest all other I completed in the revision. You see, hardly 1.5 hours. Fundamentals we completed. Nature, objective and scope of audit we completed with explanation. This weightage is 10 marks. 8 to 10 marks we completed within just 1.5 hours. Can't you read this later? One more time in-depth preparation and revision. Later, day before exam, 45 minutes enough for you to read this. Because you don't have responsibility to explain, no. You just have to read it. 45 minutes is what it takes, this chapter. Day before exam, you have 20 hours time, which is solid. So much time. Sufficient for you to watch my marathon once again and then do a revision also. Are you clear? That's it. So, first chapter is completed. Just 5 minutes, we'll begin ethics and terms of engagement. Are you clear, everybody? Able to recollect everything? So, SA 210. Agreeing the terms of audit engagement. Let's revise the standard 210. Agreeing the terms of an audit engagement. What is this standard is mainly talking about? Very simple. See, generally when we are doing a statutory audit, mandatory audit, directors must know what are their duties, and you being an auditor, you know obviously what are your duties. Even if the directors misunderstood that you not only do audit, but you will also file IT return, you will also prepare books of accounts, like, obviously people don't understand. They think auditor means he will take care of entire books, documents, everything. But we know very well, we are only here for audit. If a company appointed me as a statutory auditor, my duty is only audit. I should not do anything else. I should not do books of accounts, all that. But they are not aware of it. So, in order to avoid confusion and disputes at future date, we must give something called terms and conditions, nothing but contract, nothing but engagement letter. I told you one point in our class, if you recollect, seller or service provider is the one who should dictate terms and conditions. Yes or no? Only a seller of the goods, only a provider of the service knows what are all the complex issues, what are all the issues that might arise in future. So in an audit service, you are the one doing audit. Remember, all our standards that we are going to discuss, they are all applicable for audit of general purpose financial statements. Being an auditor, you know what are all the issues and questions might arise tomorrow. You have to issue terms and conditions to client. The terms and conditions, we call them as what? Agreeing the terms of what? Engagement. So you have to agree terms of engagement with the client. You should send an engagement letter to the client so that client misunderstanding regarding what are all that you do will be avoided. The misunderstandings of the client can be avoided to a great extent. Otherwise, he might be thinking, you will take care of IT return, you will take care of books of accounts, you only prepare financials, you only do audit. No, we should tell them that and all your responsibility. Preparing financial statements as per applicable financial reporting framework is your responsibility. Implementing internal control systems so that financial statements are free from MMS is your responsibility. Giving me the information, books of accounts, additional information. If I have a doubt, I can talk to each and every employee. Unrestricted access to employees is also your responsibility. Then what is my responsibility? My responsibility is to obtain reasonable assurance whether financial statements are free from material misstatements or not. Yes or no? Now, what exactly is my responsibility? What exactly is the client responsibility? What he can expect from me? You can expect from me an audit report. That is what my duty. The format of audit report is going to be like this. Expected content of the audit report is going to be like this. I should tell to the client how I am going to make the audit report. I may have no, I mean, you don't have to tell initial itself which opinion you should give. Which opinion you are going to give, you don't, because you also don't know. But you tell them that if everything is good, I give unmodified. If something is wrong, I will give modified opinion. At the beginning of the audit itself, expected form and content of the audit report must also be informed to the client. Able to understand? You should inform him what are his responsibilities. You should inform him what are your responsibilities. You should inform them what is your objective and scope. Yes or no? What is the objective of audit? What is the scope of audit? Tell the client that you are not an expert in everything. Yes or no? And what are your responsibilities? What are client responsibilities? What is the applicable financial reporting framework applicable? Tell them. Yes or no? And how the format of audit report is going to be, how the content of the report is going to be. An idea you give him, he will go and see standard and auditing. If at all he want to know, hey, what auditor is going to give me tomorrow at a future date, he said he will give me audit report, how audit report looks like, you know, he will go and see the original standard. If at all he has a doubt, you tell them that you are going to give audit report as per 700. Able to understand. That's it. Now, there are some circumstances where engagement letter is not required. There are some circumstances. In Jan 25 MTP, they asked this question. What are the contents of engagement letter? Under what circumstances an engagement letter is not required? Certain terms are need not be included. When, if the terms and conditions are already given in the law in detailed terms and conditions are given in the law itself. What is auditor duty? What is client duty? Clearly law itself. Then auditor need not include those terms in engagement letter. Except those terms, remaining terms, if at all you want to tell no, that you include. What are the terms that need not be included in engagement letter? If law and regulation under which you are doing audit, it is detailedly talks about the terms and conditions, then except that remaining you can tell in the engagement letter. Why? Law, if at all, is clearly containing. Client must know the law. Ignorance of law, no excuse. So engagement letter is a document sent by auditor to client to reduce misunderstandings about what? About scope of audit, about objective of audit, about responsibilities of audit, about management responsibilities, about financial reporting framework, about audit report. Yes or no? Engagement letter must be in writing to ensure that both the parties are clear on nature. Especially in non-statutory, it is even more important. People, many here students wrongly interpret. In non-statutory audit only engagement letter is required. In stat audit, engagement letter not required. That's wrong. In non-statutory audit, engagement letter is even most important because there is no law. If tomorrow, if there is an issue comes between you and the auditor, the client and the auditor, client said, sir, I told you you have to do 10 branches audit. But I heard that only, 2 branches. I thought only 2 branches. I only completed 2 branches and I quoted fees for 2 branches. Later client is telling me, no sir, I told you 10 branches. For 10 branches put together only this fees. Dispute. Yes or no? Who will resolve this dispute? Because it's a matter of contract between you and the client. If it is put on paper clearly, you can easily show. Look, at that time you agreed 2 branches only. I told you signed it. Yes or no? Able to understand. So, the auditor must agree terms. With whom you should agree the terms and conditions? With obviously top management. In entire our auditing subject, top management referred as those charged with governance. Top management is referred as what? Those charged with governance. Those charged with governance. Governance means what? Governance means authority. Governance means accountability. A person in an organization who have both authority plus accountability, then the person is called as those charged with governance. Yes or no? That's it. One of the important question. This itself they will ask as a 4 marks question. In ICA book, there is a format of engagement letter. If possible, refer that. What the format says, you requested us to audit the financial statements of the company comprising balance sheet, P&L, cash flow, all that. Yes or no? We are pleased to confirm our acceptance and our understanding of this audit by these engagement letter. So what we understand about audit, you asked me to do audit, right? What is meant by audit? I am telling you through the engagement letter. So don't think otherwise. If you have some other meaning in your mind, audit means this only, I do this only, you have to do this only. Yes or no? You need to clearly tell the client through engagement letter. When engagement letter is to be issued, at the beginning of the auditor or at the end of the auditor? Beginning of the audit. There is something else called representation letter. We should get that at the end of the audit. Before signing the audit report, we should obtain management representation letter. We will discuss that in 580 standard. We have a chapter called completion and review. In that chapter, 580 standard is there we will discuss. Clear all of you? Now look at it. There is something called preconditions for audit. Before you even give engagement letter, see whether preconditions present or not. Preconditions to audit is also called as responsibilities of management. Responsibilities of management and those charged with governance. Preconditions to audit can also be referred as responsibilities of management. In SA 200, the same is referred as premise to audit. The same is referred as premise. What should be the premise before you start the audit? What should be the scenario before you start the audit? Getting it? In 210 standard, it is called as precondition. In SA 200, it is called as premise. In SA 58, it is called as management responsibilities. Able to understand? So all the three are same. Now, precondition. What is a precondition to audit? Precondition to an audit. Before I start the audit, one important condition. Whatever financial reporting framework company decided to follow, that must be acceptable. And you should get an agreement. You should get an acknowledgement from management that premise to audit will be fulfilled by them. That they will accept their responsibilities. Yes or no? That is why we obtain this agreement through what? Engagement letter. So what is that audit? What is the audit responsibility on a precondition? Auditor must determine whether financial reporting framework is acceptable. Company is going to prepare financial statements, books of accounts. Already they started preparing all that. Suppose you found books of accounts are prepared on cash basis. Obviously financial statements will also be on cash. Is financial statements on cash basis acceptable in a company? If you know that it is not acceptable, yes or no? If the financial reporting framework is not acceptable, you should not accept the audit. You should not accept the audit. So first auditor has to determine whether financial reporting framework is acceptable. Then get management's agreement. Get their acknowledgement through engagement letter. What? Management is responsible for preparing financials. Management is responsible for designing and implementing necessary internal. Management is responsible to provide the auditor with access to all information, additional information, unrestricted access to persons within the entity. Suppose if preconditions are not present, first discuss with them. Sir, you are following cash basis of accounting, sir. Okay, that is not permitted. That is not an acceptable framework. Management immediately said, sir, we will rectify everything. Please give us time. They rectified. Then no problem. You can continue doing audit. Or reject the audit engagement. If preconditions are not present, reject it. You're getting it? Unless if the law or regulation says you can't. You can't reject. You are already appointed. You can't reject. It's a statutory or government corporation audit. You are already appointed. You can only give report. Yes or no? In that case, if the unless required by law, okay, when you should reject the audit? If financial reporting framework is unacceptable or management is not agreeing with their responsibilities regarding financial preparations, internal controls, access to information and people, they are not agreeing with that, then also reject. Yes or no? Suppose if management impose a limitation, getting it, the auditor shall not accept the audit. At the beginning of the audit itself, before you accept it itself, company is putting so many restrictions on you that you can't do the audit properly. Don't accept. Suppose if limitations are imposed after accepting the audit, withdraw from the engagement. Limitation imposed on the auditor after accepting the audit, what to do? 705 standard we have, there we will discuss. Clear? Next. So objective and scope is very easy. Next, sometimes no, like change in terms, I'll come back to it later. Fine. So we understood what is precondition to audit. We understood what is engagement letter, why it is necessary, what are the contents of engagement letter also we understood. Now, is engagement letter to be sent in every audit? Recurring audit, suppose no, this company appointed me. This is a non-government company. They appointed me for 5 years of one term. First year I sent. Should I send second year, third year, fourth year, fifth year, every year also? Should I tell them what are the terms and conditions? Not required. But there are some scenarios, there are some circumstances where even though it's a recurring audit, you must send engagement. Generally, auditor must issue engagement letter for a newly appointed auditor. Yes or no? Newly appointed. For recurring audit, no. For recurring audit, no. You must decide whether engagement is needed or not, depending upon the circumstances and your common sense, professional judgment. Generally, what is a recurring audit? Recurring audit means what? If previous year auditor is reappointed in a 5 years engagement. No, last year you are the auditor. Now also you are only be the auditor. Next, there are some circumstances where engagement letter has to be reissued. One, company misunderstood the objective and scope of the audit. The top management, no, they misunderstood the terms and conditions which you originally gave. Give them one more letter with a detailed explanation so they will understand. Or changes in terms and conditions. Last year you were appointed only for doing 5 branches audit. Now company wants you to do 10 branches audit. Revise the terms, no, give one more time new engagement letter. Change in law and regulation. The law under which you are going to do the audit, the law itself is changed now. Again, give engagement letter. Change in financial reporting framework. Until now, companies preparing financials using accounting standard division 1. That is what you spoke in the engagement letter in the last year. Now, this year, companies preparing financials as per division 2, Ind AS. In the old engagement letter, division 1, you are saying no. Now, financial reporting framework changed no. So, give one more letter saying division 2 is applicable. Now, change in audit reporting, recent change in top management, significant change in size and nature of the entity. In all these circumstances, the auditor must issue engagement letter once again. Clear? Suppose I issued already engagement. Engagement letter I issued. You know what? Company is asking me to change some terms. Especially how you know? They're asking me to change terms before you decide, before you agree or disagree. They asked you for some changes in terms. First check, is it practical, possible or not? If auditor is asked to change the audit engagement to one that provides lower level of assurance, see whether it is a reasonable justification or not. For example, no, in audit, no. I told you, in audit we do many procedures, inquiry, external confirmation, reperformance, recalculation, so much. Company is asking, sir, external confirmation and all don't do, sir. Just to do analytical review, inquiry. Don't even verify books, please, documents. Kindly cooperate, they're asking. Array, if I do like that, I can only give a lower level of assurance. I cannot give a higher level of assurance. You are asking me from audit to review kind of work. Client also said, yes sir, do limited work and then give me audit report. No, it's not possible. Before agreeing to change, an audit engagement to review, or before changing from audit to related service. Suppose client is coming and asking, sir, you are very strict, sir. No, let us not continue as an auditor and client. You do one thing, you just do review. I will go and appoint some other auditor. They said, now they are asking you to change audit engagement to review engagement. Then auditor must assess, is legally possible or not, contractually possible or not, because you are not the one who appointed me. Shareholders appointed me. Under law, they appointed me. Look at the legal and contractual obligations before agreeing to change, especially when the change is resulting from audit to review, audit to related service. Are you clear? Yes or no? Now, sometimes no, some work you did no, until the change is accepted. Suppose you are going to accept the change. That work and all, you can use it even in the upcoming proposed work. To avoid confusion in reporting, the report on the new engagement, you are going to give a new report, right? Ultimately on the final engagement, whatever you decided, don't talk about original engagement. And once you accept the change, record new terms and conditions in a new engagement letter. Clear? So indirectly, what are they saying? Whenever a client is asking for change, the auditor can accept it when there is a reasonable justification. What do you mean by reasonable justification? Check legal and contractual obligations. If at all legally it is permitted, contractually it is permitted, yes, then it is reasonable. If it is legally is not permitted, then you will not accept. Yes or no? Once you accept, no, agree and record new terms in a new letter. To avoid confusion, the report on the new engagement shall not include original. Non-acceptance of the change. The auditor shall not accept if there is no reasonable justification. Suppose client is asking you to change your rights terms. Now you can't accept it. Client is not cooperating you. Withdraw from the audit and also check whether your withdrawal has to be communicated to any parties. By the way, why a client will ask you to change? Simple. Circumstances change, misunderstanding of original terms and conditions, or a client cannot cooperate you. They want to restrict your scope. That's it. For example, if auditor cannot obtain evidence on trade receivables, management is requesting auditor to change to a review. Sir, why external confirmation? All that, sir. You saw already records. No, that's enough. Don't go for external confirmation. Indirectly, they are asking me to do lower level of assurance. So, in order to avoid qualified or disclaimer opinion, so the auditor must evaluate the situation carefully. What you will evaluate? Very simple. Is it reasonable? Reasonable when legally, contractually, it is permitted. Then it is reasonable. Yes or no? So, that's it. Completed. SA 210 is over. See how much time it took? Hardly 20 minutes, 18 minutes. Clear? Able to recollect everybody? That's it. This is another 5 marks topic. 10 marks we covered in less than 1 hour. Are you clear? Till now we completed 20 marks in the revision. See the amount of speed at which we are able to discuss. If you have a conceptual clarity, next time you imagine when you're reading it 1 more time, 2 more times if you're reading, imagine the kind of confidence you get. Scoring 80 plus, 70 plus is not at all a big deal in audit. It is just that you need to see the real concept, real understanding. Clear? That intensity is also important at your part in learning. That's it. Confident? Yes. Audit documentation. Remember, whatever we do in audit, we should document. Why first of all documentation? I told in our regular class also how documentation looks like. Documentation is like soft copy, electronic, as well as it is a hard copy. Like when we are doing audit, no. See, for a particular company, when we are doing audit, no, we do verification of opening balances. We first go and try to understand the company. Yes or no? We will understand what is the company, what is their memorandum of association is saying, what articles of association is saying. We verify so many documents. We talk to so many people. We see purchase process, how it is happening. We see sales, how it is happening. First, we do something called risk assessment. In risk assessment means what? You are understanding the company. You are understanding the environment. Yes or no? So, get first an understanding of the company. Now, relating to this understanding, you will be reading so many documents, so many contracts, so many commitments which the company entered into, so many agreements will be there. First, get that copy of all that you get, that document. Tomorrow, if somebody asked you, do you know about the company? Suppose there are so many auditors who have signed audit report, yet they don't understand what the company is doing. First question, when the NFRA is doing review, all that, they will ask you in inquiry, what you know about the company you audited. You should be able to tell what company is doing, how their business practices, how their business strategies, all that. Yes or no? Understanding the company. What to understand in the company? We are going to discuss that in risk assessment chapter. We are having a chapter called risk assessment. Inside that, we'll be revising what to understand about the company. So documented. Now you verified opening balances, documented. Purchases you verified, documented. Sales you verified, documented. Whatever you are verifying, gather that and document it. Now, how can you document? Either electronically you can document or physical hard copy you can document. Today, we are all doing audits digitally. In fact, that is concept we call it as remote audit. What is it? Concept is called as remote audit. Nothing but work from home. Many Big Four employees working from home. Many Big Four no. Like suppose you're joining in a Big Four or some audit firm. You are doing audit of some foreign company sitting in India. Remotely you're doing audit. Working papers are maintained in soft copy. That's it. Now, what is that documentation? What is that working paper is what we are going to revise in this chapter. What is that? Audit documentation standard. We are actually going to discuss, we are actually discussing 230 standard. What the standard says? Audit documentation refers to record of audit procedures performed, relevant evidence obtained, conclusions reached by the auditor. It is also known as working papers and work papers. So, audit documentation refers to audit procedures performed, audit evidence obtained, conclusions which auditor is reaching. So what are all processes? You are verifying so many purchases, sales, you are verifying. Whatever you are verifying, record it. Whatever information you are getting, record it. Whatever decisions you have taken on purchases, what is your call? On sales, what is your decision? On inventory, what is your decision? Record it. Now, whatever the process of recording is there, right? We call it as audit documentation. Getting it? This is also called as working papers and work papers. Now, there is another definition called audit file. What is a file? You know, whatever you are working, you need to document, right? That's called documentation, right? This documentation you will store, where you will store? Computer, soft copy, electronically, or hard copy. That is called as audit file. Audit file means medium of storing documentation. Audit file is one or more folders or storage medium containing audit documentation for a specific engagement. MCQ might come for all engagements, option A. B, for audit engagements, option C. For assurance engagement only, option D. For a specific engagement, Tell me, we must maintain documentation for each client separately? We must maintain exclusive file for each year audit? Yes. So that's it. Now, tell me, what is the purpose of documentation? What is the nature of documentation? Nature is very simple. What is the documentation nature? It's an evidence. It's an evidence that you planned and performed the audit as per standards on auditing, as per law and regulation. It's an evidence for your auditor's conclusion. You gave unmodified opinion. Tomorrow NFRA is asking question, how did you give unmodified? Sir, I have verified everything. I took a conclusion that everything is financial statements are true and fair. How did you to conclusion? I verified purchases. Everything is true and fair. How did you know it is true and fair? You must show the proof. Audit documentation is evidence for the conclusions reached by the auditor. Evidence for audit was planned and performed as per law. Purpose, audit documentation, it helps you in so many ways. It helps you, to plan and perform the audit in a better way. Yes or no? It will help you to direct your team, supervise your team, review their work properly. Documentation team, when they're working, they gather documentation, right? So they need to work carefully. If they did not work, if they did not work carefully, through documentation I can discover them. It will make them accountable. When I say please document what you did, they do carefully. If I say no need of documentation, they do carelessly. Yes or no? That's it. Documentation, record of important matters for future audit. It will help you for future audit. You are appointed as an auditor for 5 years. First year you did lot of work. Second year your audit firm, some other articles and all were there. They don't have to stress much. They can look at the previous year documentation and easily can plan the next year audit. Yes or no? Documentation helps quality control reviews. Documentation helps external inspection by NFRA quality review board. Like there are so many inspection authorities, ROC inspection, that and all, it will help able to understand. Next, manner, how you should document. What is the manner of documentation? In exam they'll ask you what is the nature of documentation and purpose of documentation. 4 marks or 5 marks question they'll ask you. Or what is audit documentation? 3 marks meaning they'll ask you. Yes or no? Now, what is the manner of documentation? The auditor must prepare documentation in such a way an experienced another auditor, some other experienced auditor is there, right? He is not part of your team. He is not part of your team. I told you, entire audit is performed by our audit firm, one of the team. The team is called as what? Engagement team. Documentation, who will prepare? The team will prepare. In how they should prepare, in what way they should prepare, documentation shall be prepared in such a manner that an experienced auditor who do not have connection with the audit, means he is not part of your team. For that audit, he is not part of your team, but he has a knowledge of auditing. He has a knowledge of financial reporting framework. He has a knowledge of accounting standard. He has a knowledge of auditing standard. He also knows about the client business. Experienced auditor is a person who has a reasonable knowledge of all this. By looking at your documentation, by reading your documentation, will understand what audit procedures you perform, nature, timing, extent, how you performed risk assessment, how you performed a further audit, what is the result of the procedure, what information you obtained, what significant matters you reached, what significant matters you identified, what professional judgment you made on the significant matter. Sir, what is significant matter? What is professional judgment? Last concept in this chapter is that only. In documentation, last topic is that only. Able to understand. Next. What do you mean by documenting nature, timing, extent? I remember I showed you audit plan also. Documenting nature, timing, extent means what? Suppose inventory, no, I verified physically. I went for physical verification. Nature of audit procedure is physical verification. Timing, I did at the year end. Extent, I went for 3 to 4 days and I observed complete management process. Nature, timing, extent. You should document. In documenting nature, timing, extent, first what are all you should document? First, you should document what test you performed. Nothing but what? Identify characteristics of specific items tested. I tested inventory, existence and condition I tested. Who performed? The engagement partner performed. Who reviewed? Who reviewed? Another partner of the firm reviewed. Date on which they reviewed. Extent of the review. Full my work is reviewed. Yes or no? Document. Discussion of significant matters. When I go for inventory, I got some doubts on third party. Inventory kept with third party. Significant. I discuss significant issues. What matters you discussed exactly? With whom you discussed? Yes or no? Suppose if at all the information obtained by you is inconsistent. You got some information that is not matching with some other information. Have you resolved that inconsistency? Have you addressed that inconsistency? That also you should document. When you are documenting audit procedures, auditor must also document what test he performed, who reviewed, what are the significant matters, with whom the matters were discussed and resolved, how the inconsistencies were resolved. Everything you should document. Whatever work you're doing, entire that work has to be documented. Clear? Next, in what form you should document? Sir, should I document electronically or physically? What content I should document? Suppose there are so many documents, sir. Purchase vouchers, 200 vouchers are there. Should I take a Xerox copy and then document? What should I do? What content I should document? How much I should document? How I should document? How much content, to what extent? It depends upon size and complexity of the entity, nature of procedures performed. Suppose I just did observation, documentation may not be there. I inspected one memorandum of association, I take a photocopy and then document it. Depends upon risk. If at all in purchases risk is high, I will document entire purchase manual. Then if significance of the information obtained, I am getting so much of information from the client, evidence from the client. If I feel that is significant, I will take a photocopy of it. Yes or no? Exceptions identified. We will discuss what is this word exception in 505. That time I will once again connect it here. Exception means what? Inconsistencies. Getting it? If at all inconsistencies or more, I need to resolve, right? You may have to document. And audit methodology and tools used, document. What are the form, extent, content of documentation? It depends upon size of the entity, nature of the procedure, risk involved, significance of the evidence obtained, exceptions identified, methodology. It also depends on audit tools and methodologies. Examples: I will document my program. Analysis I will document. Memorandum issues I will document. Significant matters I will document. Confirmation letters and representation letters I obtain, that I will document. Checklist I will document. I will be discussing WhatsApp, mail and all with the client, that I will document. Sometimes I will also include copies of entity records. Don't use the word entity record I will document. Copy of entity record also sometimes I can document. The auditor may also include copy of entity records as a part of documentation. Example: significant contracts and agreements, memorandum of association, articles of association, company bylaws and all. Yes or no? Audit by the way, just because you are keeping a copy of it, company is thinking to discard them. Auditor is already having a copy of it. No, why should I maintain? Company is thinking to discard. No, audit documentation is not a substitute for entity records. Yes or no? Next, audit documentation do not include superseded drafts. You should not document. See, sometimes superseded means what? First you took one photocopy, and that's a mistake is there. Again you took one more Xerox. After typing properly, after when you took one more. Now this new Xerox or new printout, the new printout which you took superseded the old printout. Should you retain old printout also? No need. That's it. Yes, notes showing incomplete or preliminary thinking. For example, when I'm taking class, I'm writing like this. Some students, they will ask me this running notes also. Hey, I just randomly scribbled. What I scribble also I don't know. Yes or no? This is called preliminary thinking. Sometimes when you're doing accounts, costing problem, you'll do some numbers. That also you will document. You will revise that also later on. No need. Are you getting it? Yes. So auditors preliminary thinking, that and all no need to document. previous versions corrected for typing errors and all. Old version documents are there. In that, no, now I did some typing correction and all, and I took new document. Old document don't. Duplicate copies. Why a multiple of the same copy? Why you take multiple prints? Only one is enough. Yes or no? Audit documentation do not include superseded documents. This itself can be asked as a 4 marks question. Audit documentation also, they will ask you, what is meaning of documentation? Give you examples of documentation. Can copy of entity accounting record be documented? And what is not included in documentation? Like this, they may ask you 5 marks question, entire this content. Are you clear? Now, what is audit file? Just now we covered. Now tell me, when you should prepare this documentation? After completing the auditor, while doing the auditor? Timely preparation. The auditor must prepare documentation on a timely basis. You know, documentation prepared after work is completed is less accurate than the documentation when work you are doing. Correct? Now you document what are all important data is that when you're verifying purchases, you feel something important, immediately document it. Later, once you complete the audit, no, neatly arrange them. Purchases related documents all at one place, sales related documents all at one place, inventory related workings at one place, employee cost workings at one place. You sort it and document it, arrange it. That process is called as assembly. That process is called as what? Assembly. You know, the audit file must be assembled and completed timely after date of audit report. So audit documentation must be assembled in a timely manner. Yes or no? And complete it compulsorily after the date of audit report. And there is a standard called standard on quality control. That standard says a partnership firm, you are the audit firm, right? Establish rules for this. In your firm, rules established for assembly purpose. The rules must say for audit file, no, complete assembly process within 60 days from the date of audit report. Once you give audit report, within 60 days assemble the final audit file. Remaining, sir, I am also doing review work, sir. I am also doing assurance. I am also doing related. For them, what is the time limit? That you decide. For audits, 60 days. Are you clear? Then remember, assembly of documentation. Like once audit is completed, you're rearranging the papers, computer soft copy folders and all, you're organizing everything, right? That's an audit procedure or administrative process. Administrative. That is not audit procedure. Audit procedure means verifying clients' financial statements, all that. You already completed that. You gave audit report also. What you will perform now? Administrative. The final audit assembly, file assembly is an administrative process. Do not involve new procedures or conclusions. Changes can be made. Can we make changes to documentation? Yes, you can make, which are administrative in nature. Already covered that point. What documentation do not include? That is nothing but administrative. What are they? Deleting, discarding, superseded, cross-referencing working papers, signing of checklist. I'm calling my articles and all. I'm asking them to sign on the papers. What are all they brought? Yes or no? Documenting evidence obtained, documenting the evidence obtained, discussed and agreed upon before audit reported. What are all the documents important? That and all we will keep it. Remaining unnecessary items and all we will throw it, discard it. Are you clear? So they will ask you in an exam, write about assembly of documentation, 4 marks or 5 marks question. Many times they asked. Now once you assemble it, what you should do? Keep it, store it, retain it. For how long? See, standard on quality control says minimum no shorter than 7 years from the date of audit report or group audit report, whichever is later. Yes or no? After the final audit file is assembled, the auditor shall not delete or discard the audit documentation before the retention period is completed. You should, as it is, keep it intact. You should not change anything later on. Once audit is completed, once audit documentation is freezed, you should not delete anything inside that. You should keep it as it is for 7 years. What about other engagements? Sir, I am also having documentation for review. I also gather documentation for assurance and related. What about that? Firm will decide for what period you should. But for audit, 7 years. Yes or no? Who is the owner for documentation? Whose property? Auditor. As per SQC, the documentation is the property of the auditor. The auditor, at his wish, can share the extract of documentation to the client, third parties, with the consent of the client, provided it does not affect your independence, integrity, professional behavior, confidentiality, all that. Okay, that's it. Clear? Easy or not? Now then you should also document what? You should document significant matters, professional judgment also you should document. Before that, no, let me devise this one, audit summary. There is also something called audit summary memorandum. What is audit summary memorandum? The auditor prepare a summary. Completion memorandum, which is also called as, generally it will help in large audits. Getting it? For large and complex audits, no, whatever works you did in the last 200 mandates, okay, 200 mandates you worked almost, what are all works you did, what are all evidences you gathered, what are all decisions you have taken, with whom and all you discussed, keep a design as a summary. Before you conclude on the audit, develop a summary. See the entire summary once. Then you take a conclusion. Then you express the opinion. Getting it? So a summary can help in effective and efficient review and inspection of audit documentation, especially for large and complex audit. It will help the auditor to address all the significant matters, all the significant issues considered by me or not. He can easily check with the summary, yes or no. So audit summary memorandum, what you should include in the summary? Significant matters which are identified in the audit, how these matters and all were dealt by you. Is it resolved or not resolved? All that you should document. That is called as audit summary memorandum. Yes or no? This summary will help the auditor to evaluate whether standards and objectives are achieved, whether overall objectives are achieved. As a whole, you got a reasonable assurance on the financials or not. Summary memorandum will help you. Remember, significant matters and all you should document at one place. That summary memorandum is one of the best example where all the significant matters will be documented at one place. Clear? Next. Now, what is a significant matter, sir? Significant matter. Many a times we are getting this word. What is a significant matter? Whether a matter is a significant or not, auditor has to do an objective analysis, unbiased analysis of facts and circumstances. What is a significant? When a matter is significant, auditor's professional judgment. Objective auditor, based on the facts and circumstances, he will decide whether a matter is a significant or not. Yes or no? Example, matters that give rise to significant risk. Suppose if at all something is giving me significant risk, that's a significant matter. Circumstances causing significant difficulty in doing audit. You know, I'm taking extreme difficulty in GST verification. Company does not maintain proper GST records. I'm unable to verify GST properly. That's a significant difficulty. That's a significant matter. I should raise that issue with the management. I should discuss with them and then resolve it. Then findings. I found something in audit where my opinion gets modified, or emphasis of matter paragraph might be included. If at all an issue is such severe, because of that I may have to modify the opinion, or an emphasis of matter paragraph has to be used. We already discussed what is emphasis of matter paragraph in audit report. Yes or no? Important matters. If at all that is so important, then that is also called as what? Significant matter. Yes or no? Or result. I got some result in audit. I verified something. I found one result. What? Financials are materially misstated. Or now I need to revise my risk assessment. I need to revise my risk assessment. Earlier I thought low risk in sales. In sales I thought low risk. Now I got to know that in the sales is high risk is there. So that time also I should document. Clear? Now, not only matter what judgment used there. How do you decided that it is a significant matter? That judgment process also you should document. What is it? Situations. The auditor must document use of professional judgment. And you see, later on you say everywhere, sir, that time I thought it is genuine, sir. That's why documented. How you thought genuine? That thought, how you thought? Related some information you might have gathered, no? Documented. Yes or no? Rationale for conclusion. Document the rationale when a requirement asks the auditor to consider information that is significant. So if at all some accounting standard and all is saying you have to verify so and so, you might have considered that as a very important point. Document it. The document the basis for conclusion on a subject to judgment, like accounting estimate. Document wherever some estimation issues are involved. Subject to judgment. Subject to means what? Here you took a here you took a decision that so and so asset useful life is 30 years, 20 years. On what basis you took 30 years is reasonable? Some information you have verified, no? Documented. Yes or no? You document if at all you are having any concerns on documents or evidences. Some information company gave you, some deeds, sale deeds and all they gave you. You got some doubts on that. Later you went for expert opinion and finally resolved. Document that. This is called documentation of professional judgment. Nothing. At the time whenever you are doing work, you decided something. Have you decided that? Okay, tomorrow if you think, you will forget this. If tomorrow NFR is coming, sir, on what basis you decided this is correct? Sir, papers and all is there. I'm unable to recollect what I did. I will document my professional judgment. Are you getting it? That is called documentation of professional judgment. Are you clear? Documenting professional judgment explains auditor's conclusion and reinforce the quality of the conclusion. Earlier I decided something. Now today if they are asking information, I'm unable to recollect. That's why document. If you document your professional judgment, you can once again prove on what basis you took some decision. Yes or no? That's it. With this, entire documentation topic is completed, which is 5 marks, 25, less than 25 minutes. Clear all of you? Yes or no? Read it once again thoroughly, you will get it. Okay, yes. Then we have something called materiality, SA 320, materiality in planning and performance of an audit. What is materiality? What is, first of all, definition of material? Financial statements must disclose all items, important items. Material means that something which influence user decision. Materiality is not just size. Even small items and serious issues also sometimes become material if it is a fraud. There are some quantitative, indications also. For example, Schedule 3 says income or expenditure which is more than 1% of revenue or 1 lakh, whichever is higher, that is material. Shareholders more than 5%, they are material. So the standard that is addressing about materiality is 320, and also 450 also talks about materiality related discussion to some extent. So materiality is defined sometimes in financial reporting framework, often discussed in financial statements. Characteristics of material likely to influence users. Judgments are based on size, nature, or both. Based on common user needs, we decide materiality. Suppose if financial reporting framework is silent, above characteristics will be giving you a reference. Auditors can use the above characteristics as a reference to decide materiality. And when you're doing audit, as an auditor, you should take some assumptions about the users. What assumptions you should take? You assume that they know reasonable knowledge of business. You assume that they know the concept of materiality. You assume that they understand estimates, judgments, future considerations. You assume that users will take an economic decision based on the financial statements. These are the assumptions that we take based on users. This was asked in CA final once for 4 marks. Be careful. In inter also it can be asked. In one of the MTP it was asked. Next. Now what is performance materiality? Performance materiality is an amount set by the auditor at a lower amount, correct? Lower than overall materiality, below overall materiality, for reducing the chance of undetected, uncorrected, exceeding overall materiality. Performance materiality can also be for specific class of transaction account balances and disclosures. Yes or no? Understood? Specific performance materiality we call it as. And how do I determine materiality? You can use benchmarks. Okay. So auditor's professional judgment, apply a percentage to the chosen benchmark. Factors influencing benchmark: financial statement elements, user focus areas, entity nature and context, ownership and financing, benchmark volatility. Examples and selection of benchmark. Examples: these can be various benchmarks: PBT, revenue, gross profit, all that. Selection of benchmark: you can select it from current period, or you can select it from prior period. You can select from budgets, or and one more thing: if at all PBT is more volatile, then use normalized PBT. Based on past average PBT you can use. Current year PBT, if you think last year PBT, current year PBT is too different. If at all a particular benchmark is highly volatile, use some other benchmark. Revenue you use. If revenue is also volatile, use some other benchmark. Capital, share capital, net worth. Finally, auditor will apply professional judgment and determine a percentage on a chosen benchmark. Typically, percentage on PBT is higher than percentage on turnover. Generally, when you're deciding materiality, percentage applied on PBT is higher percentage, because profit is lower amount will be bigger, but turnover will be bigger amount, so percentage will be smaller. In our EVO class, I clearly explained about this materiality discussion. So in depth I discussed triviality level, performance level. I linked it with the tolerable misstatement, all that I discussed so extensively. Here I'm just doing quick revision. Sometimes we decide materiality for a particular class of transaction separately. When auditor feels misstatements below overall materiality can influence users' decisions at some areas, for those specific areas, we can decide materiality level separately. Generally in this company, on any particular item, if at all 10 lakhs and above mistake is there, it's a material misstatement. But for statutory duties verification, statutory due verification, 1 lakh is enough. I may decide like that. For TDS verification, GST verification, Provident Fund verification, 1 lakh itself is material for me. Now, so sometimes misstatements below overall materiality can influence user decision. Here, for statutory compliances, the lawmakers and all, they may not tolerate up to 10 lakhs variation. Up to 1 lakh they may tolerate. So what are the factors that influence the auditor's need to decide a separate materiality level for a separate class of transaction? Legal and regulatory impact, industry specific key disclosures, focus on specific business aspects. Suppose user had a particular attention on so and so. For example, newly acquired business is there. Recently we acquired one business and everybody is eyeing on that. So for that business, even a small error also we won't tolerate. So their materiality level can be lower or higher. We don't know. Able to understand. Finally, sometimes the materiality has to be revised because of new circumstances, because of new information, where actual results were different from anticipated results, or high risk estimates, or you got a better understanding of the client. Suppose yeah, that's it. And documenting the materiality, you need to document overall materiality, you need to document specific materiality, you need to document performance materiality, you need to document any revisions made to the above, including reasons thereof. Understood? Then, and materiality and audit risks are throughout the audit. Yes, materiality is applied in planning and performing the audit and evaluating misstatements and also forming the opinion. Materiality is used throughout the audit. And materiality and audit risk, they are used throughout the audit, at the time of risk assessment, at the time of performing audit, at the time of evaluating opinions. Next, 330 auditors response to assessed risk. In 315 you do risk assessment and you will assess it. 330 talks about further audit procedures. Further audit procedures means what? Performing test of controls. Factors influencing extent of test. What I tell you is, in this test of controls, this point you remember, specific inquiries when deviations are detected. When deviations are detected, what you need to do? Assess whether test of control provides sufficient basis, determine additional test needed, address RMM with substantive procedure. And substantive substantive procedures are performed for all class of transactions, all material classes of transaction balances and disclosure regardless of risk. The objective is to detect material misstatement. Substantive procedures are two types: test of detail, substantive analytical. To what extent? Sometimes you will do substantive analytical alone is sufficient. Test of details, if supported by control testing, combine analytical plus test of details is a best combination. If at all unsatisfactory control test results, increase the substantive testing. Consider sample size or alternative methods when designing test of details. That's it. So remaining are not that important in 330. Technically 330 I tell better to leave. Okay, sometimes question might come, but bit tough to comprehend it. Almost 40 minutes we spent on chart revision for risk assessment and internal control. Very brief revision only I did. So because in Evo batch we discussed in depth. Clear? Next, SA 265. What is 265? Communicating deficiencies in internal control to the management and those charged with governance. Communication to management and those charged with governance, both of them you are communicating. What are you communicating? Deficiencies in internal control. You are communicating deficiencies in internal control, communicating deficiencies in internal control to top management and management. Like here you are communicating to two people. Like first of all, what are you communicating? Deficiency in internal control. To whom you are communicating? Those charged with governance, and you're also communicating to management. If it is a significant deficiency, you will communicate it to top management. If it is a normal deficiency, the standard calls it as other deficiencies. The standard divides SA 265 divides deficiency into two types. Significant deficiency, other deficiency. Significant deficiency you communicate to those charged with governance. Other deficiency you will communicate simply to management. Remember, sometimes management and those charged with governance will be one and same. That time you will just communicate to management. That itself is treated as communication to top management. If at all management and those charged with governance are one and same, communication to management itself is equal to communication to those charged with governance. That's it. So now, what is a deficiency? What is a deficiency? Deficiency means what? Deficiency and significant deficiency means what? By the way, before I discuss, what are the points that we are going to discuss in this? First, we are going to understand what is deficiency, what is significant deficiency. How do you decide whether a deficiency is a significant deficiency or not? Somebody is asking smart notes who I'm following goat notes is also there, which is also effective. Yeah, goat notes is very effective, I'm telling you. Both are effective. Goat notes is now much more simpler and easy. Now, how do you decide whether deficiency is a significant deficiency or not? What factors that decide significant deficiency? Will there be any indicators like significant deficiency? How do I find? Will there be any indicator symptoms? Yes, symptoms will be there. And how to communicate them? And management letter, LOW, is nothing but letter of weakness. How do you communicate? You communicate them in writing. How do you communicate them? Through a management letter or through a letter of weakness. Remember, management letter is different. Management representation letter is different. MRL is SA 580 written representation. Management letter means 265 letter of weakness. Fine. Anyhow, one by one, let's discuss. One by one, we will discuss. Deficiency and significant deficiency. A deficiency means what? Control is there, but the control is ineffective. Means the control is existing, but not operating effectively. It is not preventing fraud. It is not preventing error. It is not preventing or detecting misstatement. The control is there for namesake, but it's not working effectively. That's a deficiency. Or control is missing. There must be a control to prevent an error, to prevent a fraud, to prevent a misstatement, to prevent some misstatements. No, controls must be there. That control itself is missing. Both are deficiencies. A control is designed, implemented, operated where it fails to prevent, fails to detect, fails to correct a material misstatement. A control that is necessary to prevent misstatement, necessary to detect, necessary to correct, that is also missing. A control which is ineffective, which is failing, or a control which is missing, both constitute deficiency. Be careful. Now, significant deficiency. What is a significant deficiency? First of all, it's a deficiency. It's a deficiency in internal control or a combination of deficiencies in auditor's judgment is most important to merit the attention of top management. If I feel some control weakness is there, some controls are not working, some controls are missing, and I want this information, this point top management must know. That is so important that this deficiency merit top management attention. It merit those charged with governance attention. Then the deficiency is called as a significant deficiency. Very simple. Basically, deficiency. Either ineffective control or control is missing. Absence of control or ineffective control. Both are deficiencies. And if I feel this deficiency knowledge, top management should aware of. They must know this. Such a kind of severity it is. Then the deficiency is called as significant deficiencies. How do you determine significance of a deficiency? What is the likelihood of the recurrence? If control is weak or if the control is missing, what is the possibility of occurrence of misstatements? What is the magnitude? How much mistake might happen? If the mistake is very high amount and possibility is very great, then we classify the deficiency as significant deficiencies. Remember, by the way, significant deficiencies might exist even though the auditor has not identified any mistake. Just because say for example, a bank locker, the cashier does not put lock to the cash box. Just because he didn't put a lock, can I say that pakka cash theft happened? But if cash theft happened, I can say that lock system is weak. Correct? Exactly. Now, how do you decide whether significant deficiency is there? The matters which auditor may consider in determining whether a deficiency or a combination of deficiencies constitute significant, whether deficiencies are they significant or not. How do I decide? First, likelihood of deficiencies leading to misstatement. Whether this deficiency lead to a misstatement, what is the possibility, what is the chances? How much susceptibility to loss or fraud related to an asset and liability, subjectivity and complexity involved in determining accounting estimates, how much amount is exposed to the deficiency, because of this deficiency amount how much is exposed, volume of activity in that account or transactions which is affected because of this deficiency, how much mistake might happen, how much transaction is affected because of this, and what is the importance of controls to the financial. In control, control is ineffective or control is missing. Either the control is ineffective or the control is missing. That is what deficiency, right? What is the importance of that control to financial reporting process, to the financial statements preparation process? What is the impact of this control? Now, especially significance of controls to financial, including monitoring controls, management oversight, fraud prevention controls, controls over selection and application of accounting policies, controls over significant transactions with related parties, controls for transactions outside normal course of business, controls over period and financial reporting process such as non-recurring. These are all various controls. These are all various controls which are significant for financial reporting. They may ask you the 6th point itself for 4 marks question. the auditor has to decide whether a deficiency or a combination of deficiency constitutes significant deficiency or not. Auditor has to decide. While deciding significant deficiency, one of the factors the auditor will consider is importance of control to financial reporting. Give few examples of those controls. What controls are relevant to financial reporting? Example, general monitoring controls, that is relevant to financial reporting. Controls over fraud prevention and detection, fraud prevention detection related controls. Controls over accounting policies, controls over significant transactions with related parties, controls over transactions outside normal course of business, controls over period end financial reporting process like non-recurring journal entries related controls. These are all various controls which will impact financial reporting. And what is the importance of these controls? If that control is deficient, I may consider that as significant deficiency. Then frequency of exceptions arising. If this control is not working properly, to what is the frequency of mistakes or exceptions possible? Just 1 minute. Yeah, next. Interaction, how the deficiency interacts with other controls. Don't worry, very simple. I'll simplify this like anything now. You know, what are the factors? One, this you remember, this you read. They may ask you straight away this main question itself for 4 marks question. This main question, deficiency and significant deficiency, straight away, meaning of deficiency, meaning of significant deficiency, they may ask you. Or what are the factors that decide significant deficiency? So first point, likelihood of deficiencies leading to mistake. Subjectivity and complexity involved, especially in accounting estimates such as fair value accounting estimates. Amount exposed, volume of activity, and 6. That's it. So 1, 3, 4, 5, 6. These 5 points are enough. The importance of control to financial reporting. These 5 points, main points, that's enough. If at all the question is on matters that affect matters that decide whether deficiency is a significant deficiency or not. Now sometimes in exam examiner will go beyond. Importance of control to financial reporting is one of the parameter, right? Importance of controls too. If the control is more important to financial reporting, the deficiency in that control may call it as significant deficiency. What do you mean by significance of controls to financial reporting? Like which controls? Including example, general monitoring controls such as oversight of the management, controls over fraud, controls over application of accounting policy, controls related to related parties, controls for transaction outside normal course of business, controls on period end financial reporting process such as non-recurring journal entries like outstanding entries, prepaid entries, all that. So these are all the various controls which are examples of controls related to financial reporting. So these are all various controls, these are all various examples, various factors which auditor takes into account to determine whether a deficiency is a significant deficiency or not. Next, will there be any indicators? Yes. Mistake is there, fraud is there, that's an indicator that some significant deficiency is there. Ineffective control environment, one of the indicators is ineffective control environment. Our auditor found out a mistake. Misstatements are found. Misstatements found during the auditor's process that were not prevented or detected by internal control. We found a mistake. That itself is a proof that yes, some significant deficiency is there. Material misstatements, prior period material mistakes. Okay, some mistakes were there in the current year statement of P&L which are prior period in nature. Therefore, some deficiency pakka is there. Management inability to oversee, evidence of management inability to oversee. Management is not able to see the financial reporting process correctly, carefully. That itself is an evidence that some deficiency will be there. Yes or no? And finally, ineffective control environment. The control environment is ineffective, like evidence that control environment is ineffective. For example, management fraud is there. It may be material or not, doesn't matter, but top management fraud is there. That's an evidence that top management control environment is not proper. That's an evidence that significant deficiency is there. Management fails to implement remedial action. Like some, previously we have reported some significant deficiencies. Management does not implement any remedial action for that. Lack of risk assessment process, where it would be practically, generally every company has to do risk assessment on their own. That risk assessment process itself is missing. If that risk assessment process missing means there will be a high possibility that employee will take it granted. Entity's risk assessment is entity is doing risk assessment, but it is ineffective. Ineffective response to significant. Entity do risk assessment, they identified significant risk, but they're not doing any actions on them. They're not taking any actions on the significant risk they identified. And significant transactions involving management interest. Top management directors are having interest in some transactions. Some transactions are conducted with some partnership firms and LLPs where directors are having major interest. So that itself is one more indicator that significant deficiency might be there, fraud might be there, error might be there. So what are indicators of significant deficiency? Ineffective ineffective control environment, auditor identified mistakes, prior period mistakes, management inability to oversee financial reporting process. These are all various indicators. Now in exam, no, they might ask you this first point itself as a 4 marks. One of the indicator of significant deficiency is ineffective control environment. Give few examples. Evidence of aspect of control environment is ineffective. In this, any 4 points you write: absence of risk assessment, ineffective risk assessment, management fraud, no remedial actions for the significant deficiencies which they identify. Management fraud is there, deficiencies which were we communicated previously but no action on them. Risk assessment process is not at all there, or it is there but ineffective. These are all various points. 4 points you should write. Straight away a 4 marks question can come on this. Next, now communicating. So first to be understood what is a deficiency, what is a significant deficiency. How do you decide whether a deficiency is significant or not? Factors. Then third one, indicators of significant deficiency. Now communicating, to whom you should communicate? Communicate in writing any significant deficiencies in internal control during the audit on a timely basis. Communicate to management on a timely basis. In writing, significant deficiencies, communicated or to be communicated to top management. So tell the management that these are significant deficiencies which we want to communicate to top management. That information also give it to the management. And other deficiencies, but not, which are important for management attention, communicate them also. Getting it? That's it. So the auditor must determine based on the work performed whether deficiencies in internal control existing. If so, auditor must check whether they are significant either individually or in combination. If they are significant, tell the management that you are going to communicate them to top management. If there are other deficiencies, communicate to management directly. Both you must communicate in writing. That's it. Now, contents of written communication. Now you need to communicate them in writing, right? That is called letter of weakness, also called as management letter. It is called as both letter of weakness, also it is called as management letter. So the written communication, so description and potential effect. A description of deficiency and explanation. So you should write, sir, in purchases, GRN control is missing, purchase order control is missing, vendor master is updated directly. So describe the deficiency and how it will impact, how a fraud might come, how an error might come, impact. And specific explanation, the auditor must mention in letter of weakness clearly that the purpose of audit is to express opinion. See, what is your objective? Is your objective to communicate all the deficiencies? No. Your objective is to give opinion on the financial statements. And internal control was considered to design audit procedures but not to express opinion on effective. Tell me, are we responsible to give opinion on internal controls? Is that our duty? No, mention that also. Management, this is a letter of weakness to top management. In this letter, I am listing out some deficiencies which I identified in the audit. But remember, this is not my duty. My duty is to give opinion on the financial statements. But as a part of the audit, I verify internal controls. When I'm verifying internal controls to plan my audit, I came across some deficiencies. So these are the list. And the reported matters are limited to deficiencies identified during the audit. I need to clearly tell them that whatever I am communicating, they are only those which I identified. They are not exhaustive. In the company, so many weaknesses will be there in the control. I don't know all the weaknesses. Whatever I found out, they are limited to what we identified in audit. That fact also you should communicate. So directly, this itself can be asked as a 4 marks question. Contents of written communication. Contents of written. Adarsh, it's a live, ma. Okay, it's a live. Premier, you will find a tag called Premier. It's a live. Okay, fine. So contents of written communication. So description, describe the deficiency. What is the impact? Specific explanation, mention your purpose of audit and mention that you consider internal control, and also what are all the mistakes, what are all deficiencies you are communicating. It's only you identified. Whatever you are communicating is only you identified. Whatever deficiencies you identified, only you are communicating. You are not communicating full length of all deficiencies in internal control. That fact also you should tell them. That's it. So another 15 minutes, we completed this standard also. 265 is also over. I hope you are clear. Yes or no? So deficiencies in internal control may be identified by the auditor during risk assessment process or some other stage of audit. At any stage you may identify. Yes or no? So that's it. 265 standard is also over. Now look at, so we understood what is a deficiency, what is a significant deficiency. We understood how to decide whether a deficiency is significant or not. Indicators of deficiencies, communication of deficiencies we understood. What is management letter, letter of weakness, what are the contents of letter, what is the contents of written communication. So that you should. That's it. 265 standard is over. You see how easy this chapter is. then SA 260, SA 580. If these two we finish, this particular chapter will be over. Now, SA 560, subsequent event. Generally, many students will confuse. Subsequent event means those events that are subsequent events are those that occur after the balance sheet date, but before the financial statements are approved. That is accounting standard definition. But in auditing standard, the definition is much more bigger. You know, many students don't know, but right now I don't want to give all the entire backdrop, all that. So I will directly enter into the matter. Just a minute. Yes. You know, directly. So what is subsequent event definition in audit? Events occurring after the date of financial statements. Date of financial statements means nothing but 31st March. Date of financial statements means the end date of the latest period covered. So events occurring after the date of financials, but before auditor's report date. Generally, audit report date and approval of financial statements date will be one and same. Financial statements approval date and audit report date both will be one and same. And most importantly, fact came to the knowledge, fact that became known to the auditor when after the date of audit report. If at all auditor got to know subsequent event information after the audit report date, what to do? So events occurring after the date of financial statements but before the date of the auditor report, and that fact came to the auditor's knowledge after the date of auditor's report. For example, so 31st March is the date of financial statements. You know, 10th June is the date of auditor report. In between, 15 events happen. You know, 14 events are non-adjusting events, whereas one event is adjusting event. And as a part of auditor, before I give audit report, all the 15 events I verified. I also found out that there are only 15 events. I also found out the only 15. Management also found 15. They rectified. Everything is over. Accounting standard 4 responsibility I fulfilled. But you know, I gave audit report, right? Somewhere on 15th June, I discovered 16th event. There is actually 16 events happened during this period between 31st March and 10th June. 16 events happened. But I only know 15 events. But after I gave the audit report, now on 15th June, I got to know 16th event. I got to know another event, which is adjusting event. Or maybe non-adjusting but require disclosure. Material non-adjusting event I discovered now. Remember, this event happened between 31st March and 10th June only. But I discovered it on 15th June after audit report is prepared. What should I do? This is what SA 560 is talking about. SA 560 is not talking about remaining 15 events which you already identified and rectified. They are talking about that event which you identified after audit report is given. Now, the standard talks about two situations. Just a minute. So the standard talks about two situations. Case number 1, case number 2. 1. You identified after 10th June. 10th June in our example is what? Audit report date. You identified after 10th June. But before financial statements are issued. Financial statements issued means notice date. For example, notice date is 10th August in this company. Let us assume. You identified before, on or before 10th August. Case number 1. Case number 2. You identified after 10th August. What do you mean by after 10th August? Case number 2. Events identified after financials are issued to the public. Case number 1, events identified before the financials are issued to the public. Case number 2, event identified after financials are issued to the public. Like what to do in case number 1, what to do in case number 2. That's what they're asking. In one of the recent exam, in Jan exam, I guess itself. In Jan 25 itself, this case number 1 or case number 2, one of this case has been asked as a descriptive question for 5 marks. Be careful. Now, case number 1. Sir, I identified event between this period, sir. Like event happened before audit report date only. Event happened during May month only. But I found out that event after 10th June, but before financials are issued. Very simple. Auditor, what you have to do? What you have to do first? Fact identified before the date financials are issued to the public. If a fact came to the knowledge of auditor after the date of audit report, but before financial statements are issued to the public, first discuss the matter with the management. See, financials need amendment. If so, how management is going to amend it? Ask them. Sir, management is amending, sir. They're very humble. They're amending, sir. If management is amending financials, perform procedures on the amendment, whether they rectified financials correctly or not. Extend the audit procedure to the date of new audit report. Provide new audit report on the amended financials. Like financials are amended, right? Now give a new audit report. Ensure that new audit report is not dated earlier than the approval date. See that the audit report is not dated earlier than the revised date. Now you see, originally financials are approved on 10th June. Your audit report is also on 10th June. Now on 15th June or 16th June, you found out one more event. Now you communicated management. They amended financials. Now the financials are amended on 20th June again. Now you are giving audit report once again on 20th June. So you should, now the revised audit report date is 20th June. Be careful. So perform procedures up to 20th June once again. Whether the amendment is correctly there or not, check out. Ensure that new audit report is not earlier than the approval of the amended financials. So new audit report date you will give with the 20th June. Next, suppose management is not amending the financials. If report is not yet provided, management does not amend. Sorry sir, financials are approved. You also give audit report. Why we will amend? They replied like this. The auditor modified the opinion. You take back audit report. You have not yet given audit report, no? Tore that. Give a modified opinion because you found out a subsequent event because of which adjustment is required in financials, whereas the financials are not amended because management is not interested to amend. You modify, you amend the audit report. If report is already given, sir, I already gave management the report, sir. Notify, tell them. Tell the management and top management, those charged with governance, like don't issue the financials and audit report until amendment is made. If unamended financials audit report is issued to the public directly without your consent, they should. You must take appropriate action. Legal opinion we must take here. So this is case number 1. Sometimes no, you got to know about subsequent event. Remember, subsequent event happened before 10th June only. Here, subsequent event happened before 10th June only. But after the financials are issued to the public, you got to know that. Event happened before 10th June. You gave audit report on 10th June. Event is happened before 10th June, but you found out that after 10th August. 10th August is the date of financial statements issued in our example is 10th August. After 10th August, you got to know this. Very simple. First again, discuss the matter with management. See whether financials need amendment. Inquire how management is planning to address this issue. If management is amending, check the following. Perform necessary procedures on the amendment. Like they're amending the financials, they're revising the financials. Remember, here already previous version financials and audit report is given to public. Review management steps to ensure recipients of previously issued financials and audit report are informed of the situation. Management, no, they sent a mail. Dear all shareholders, please ignore the previously issued balance sheet P&L audit report. We are sending revised one. Like that, they sent a mail. Then happy. Extend audit procedure to the date of new audit report. You know, original audit report date is 10th June. Now the new audit report is 20th August. So up to 20th August, you apply subsequent event procedure and provide a new audit report. And remember, if management is not amending, notify the management, you know, and top management that auditor will seek future. If management does not take any necessary steps, auditor will take appropriate action. That's it. Here, amendment not restricted to subsequent event. This point is not there in India. That is not required. We will discuss in our actual class so full length. This standard we will discuss much more in depth. Just here it's a revision, brief revision. I'm giving you a clarity. That's it. Now, this, you know, case 1 or case 2, any of this can be asked. This E point is case 1. This F point is case number 2. Further, this D, what is the audit procedure for subsequent event? Obviously, the auditor shall perform procedures to get an evidence that all events between financial statement 31st March and audit report date which require adjustment, which require disclosure are identified, adjusted, disclosed. The auditor is generally not required to perform procedures on matters that were already satisfactory. You know, what is subsequent event? First understand what management is doing for identifying subsequent events. Inquire with management and top management about any subsequent events which they identify. Read the minutes of the meetings held after the financial statements date. You know, on this an MCQ has been asked in the recent Jan 25 exam. You know, here they mentioned before. They mentioned before the word. This is actually after. So read the minutes of the meeting after the balance sheet date and inquire whether any matters that were not recorded in the minutes. Read latest interim financials. Review accounting records, budgets and other information after the balance sheet date. Any latest budgets, all that. Latest minutes of the meetings. See whether are there any subsequent events, transactions, events that are happened. Check out. And if auditor identifies any event, yeah, I identify 15 events I identified. See, verify that the events requiring adjustment or events requiring disclosures are appropriately adjusted and disclosed. And the auditor shall obtain written representation confirming that all subsequent events were properly accounted. Get a written representation, get a written declaration from the management that all subsequent events are identified, adjusted correctly. Over. The standard is over. So what is adjusting event and what is non-adjusting event? This itself can be asked as a side question, which is an accounting standard question. I hope you will read this on your own. Okay, that's it. That's it. So with this 560 standard is also over. Main crux of the standard I told. Guys, I told main crux of the standard. So definitions and types of events we understood. Audit procedure for subsequent event, case 1 and case 2. All the 4 issues in 560 we understood. Within 1 hour we completed 4 standards. What are all we completed in completion and review? 450, 260, 265, 560. Now we are left with in this chapter 570, 580. 570 is already covered in audit report topic. It's covered as part of audit report topic. Now 580. Once 580, if it is covered, we will be completing completion and review topic as well. That's it. Just 1 minute. I hope you are getting clarity like never before. I hope you're able to quickly revise what is there in this subject. Yeah, now we'll proceed. So SA 580 written representation. The standard heading is written representation. Now in this standard we are going to discuss about almost some 7 topics. What is written representation? Can it be used as an audit evidence? Written representation types on management responsibilities. Other written representation. There are 2 types of representations. One is representation about management responsibilities and other representations. Okay, and what is the date of the representation and period? Conclusions and reporting, and under few cases reconfirmation of representation is required. So what are the matters on which reconfirmation is obtained through written representation? Under what scenarios reconfirmation we will obtain through written representation? Okay, these are the matters which are important in 580. Technically speaking, this is 90% content of the standard, so don't worry. Now let's look at 580. 580. Just a minute. Yeah, so 580, guys, what is a written representation? First of all, definition. Written representation is a written statement. Representation means statement given by management. What are they giving in that? What are they giving through written representation? What are they mentioning in that? They are giving me information, additional information to support my audit evidence. Written representations or written statements provided by management to confirm specific matters or to support other information which I already obtained. I got some information, I got some evidence. To support this, they are giving additional data or they are confirming me something. They do not include financials, assertions therein, and supporting records. Books of accounts and financial statements are also in writing, right? They are not representation. For books of accounts and financials, inside that some content is relating to that, management is giving me additional information. That's written representation. Books of account is not a written representation. Balance sheet P&L is not a written representation. But for balance sheet P&L, some matter is there. In books of accounts, some matters are there. On that, additional data company is giving me, management is giving me in writing. That's a written representation. Now, can written representation be used as an evidence? Of course, it's an important source of evidence. Audit evidence includes all information which auditor is using. Written representations are considered as audit evidence. It is a necessary source of audit evidence. And if management modifies or refuses, if at all management is not ready to give, it's a significant issue, it's a limitation on the auditor. And remember, written representation alone does not provide sufficient appropriate evidence. It is not a sufficient appropriate. Written representation is no doubt an evidence, but they do not provide sufficient appropriate. Sir, why written representation is necessary? Why in writing is necessary? If at all we ask them in writing, it will prompt management to consider the matter more seriously. Since I'm asking in writing, they will take it more seriously. They don't casually reply. In writing, they will reply very carefully. And written representations do not provide sufficient appropriate on their own. Only written representation is not sufficient. You see, subsequent event, just now we saw. We review latest interim financials. We review, budgets and all happen later on. We inquire management about subsequent events which they identify. So many works we do. And finally, we will ask written representation. Written representation is only confirmatory in nature, finally substantive, like it's only supporting in nature. That is never a main audit evidence, but that is also important evidence. Remember. Next, objective of the auditor. The auditor has to obtain written representations, okay, confirming that management and those charged with governance fulfilled their responsibilities. What are the responsibilities of management and those charged with governance? Preparing financial statements, providing information to the auditor. Two responsibilities. One, preparing financials and providing information to the auditor. Both they need to fulfill. They fulfilled or not? Ask them a representation. Yes, sir, we fulfilled, sir. We prepared financials as per applicable framework. We provided the auditor with complete information. Get a representation. And the auditor shall also obtain other representations. Other representations means what? If determined by auditor felt it is necessary. Some cases no auditor want written confirmation from management. There you can obtain, or required by other standards. For example, just now we saw in SA 560 standard is saying the auditor please obtain representation that all subsequent events are identified, adjusted, disclosed properly. So since 560 says I will get representation. So I will get written representation on fulfillment of responsibilities by management. I will get representation on completeness of information disclosure to the auditor. I will get representation wherever I require. I get a representation when other standards on auditing also requires it. 4 circumstances I will get written representation. And okay, you got representation. What you will do? I will respond to the whatever information they provided. They gave me I asked for some information. They gave me. Now I will respond. I will see that and then accordingly I will respond. Okay, sir, thank you. Something like that. And if management does not provide, there I will respond with my modified opinion. If management is not giving me requested representation, I will modify. For example, I will directly go to the conclusions and reporting, the last section of the auditing standard 580. Suppose I am asking a written statement, written declaration I am asking from the management. They are not providing. Management fails to provide requested written representation. Ask them, first discuss with them, reevaluate the integrity impact. Take appropriate action, including disclaimer of opinion. See, if representation they are not giving me evidence. Absence of evidence means I am unable to form the opinion. So I may give disclaimer of opinion. Written representation they gave, but it is fake. They are giving me completely wrong statements. If auditor has concerns about competence, integrity, or written representations are not consistent with other audit evidence, I have a doubts on management's eligibility, competence. I have a doubts on their integrity. I have doubts on their ethical values. I have doubts on their carefulness. They carelessly give written statements. If I feel written representations are inconsistent with other information, if I feel management is not competent, not with integrity, not with ethical values, then I will perform some processes to resolve the matter. If at all still not resolved, I will once again check are they honest and competent, and I will check reliability of other representatives. They gave all these some other representations, no, that reliability also I will check, and I will take appropriate action, including disclaimer of opinion. If representation provided by them is not reliable, why are they not reliable? The person who gave this statement is incompetent. The person who gave this statement is unethical. The person who gave this statement is not matching with other information which I have. In all these cases, I will try to resolve the matter. If unresolved, I will try to assess that impact on the overall audit. I will try to assess management's integrity, all that. And they gave so many representations, right? What is their validity? I will once again check, and I finally give a disclaimer of opinion. If requested representation not provided, or provided which is not reliable, unreliable evidence, or non-provision of evidence, in both the cases I may give a qualified opinion, or worst case disclaimer of opinion. Because if representation is not available, representation is not reliable, both leads to absence of evidence. If evidence is not available, I may give modified opinion. Next, so that's about conclusion and reporting. What is the date and period covered by representation? Date of representation, it must be near to audit report date. Written representations must be dated as near as possible to to the date of audit report, as near as practicable to the date of audit report, but not after that. Evidence and all you must obtain before audit report date, yeah. After audit report is given, what is the point of getting representation? So, since written representations are necessary evidence, you cannot express opinion before receiving them. Therefore, auditor has to receive representations before the audit report date. For what period? Representation they'll give. For which period? In audit report, what period I'm giving opinion? You are giving opinion on 1 year, then for that year related information. So, written representation must cover all periods in the audit report. Getting it? Sometimes this question was asked in CA final once for 4 marks or 5 marks question. Sometimes I'm asking representation from CFO. Sir, give me declaration that you gave me complete information. CFO told me, sir, I just joined last month, sir. I am not there full year, sir. How can I give representation because I don't know? He cannot argue that. He is going to sign the financial statements, right? Then he has to give representation. If current management was not present during earlier period, they may claim that they cannot provide representation for that time because they are not available. This fact does not reduce their responsibility. They must provide representations as a whole. Accordingly, the auditor can request representation from the concerned management, whoever is present right now. So that's date and period of representation. Very important. Straight away a 4 marks question straight away. Conclusions and reporting, a 5 marks question straight away might come. Further, written representations are 2 types broadly: management responsibilities and others. What is other representation? Other essays require the auditor to request. Like other representation means as per some other standard I may require, or if necessary the auditor may request additional representation to support other matters. So written representations are 2 types. Brain day. 1, fulfillment of management responsibility. That's one general representation. 2, representation about other representations when some other standard is requiring or when auditor himself felt necessary. For example, these representations are supplementary representations. These are supplementary representation and do not form part of representation relating to management responsibility. What are the examples of supplementary? They may ask you directly in exam. Write about written representations other than management representation, other than management responsibility. Write about written representations that are dealing with the matters other than management responsibilities. Example, these representations are supplementary representations. For example, auditor may ask representation on application of accounting policies. Auditor may ask representations regarding assets and liabilities and valuation. Auditor can ask representation on title deeds, liens, encumbrances. Auditor may ask representation regarding compliance with laws, regulations. Auditor may ask representation on subsequent events. Auditor may ask representation on going concern matter. Auditor may ask representation on related party transactions. Any of these are all supplementary representations. That's it. Next, reconfirmation of responsibilities through written representation. Actually, responsibilities management will accept through letter of engagement. Through letter of engagement, management will accept responsibilities. But there are some cases where through a written representation, we will once again get their reconfirmation. Sir, please give me once again, you are accepting all the responsibilities. Sir, I already gave in engagement letter, then that is okay. Suppose those who signed engagement letter no longer hold the relevant responsibility. The person who signed engagement letter and now who is responsible for financial reporting, both are different. Get from the latest person once again that, sir, you are accepting your responsibilities. Give me once again. The terms of engagement were prepared in last year or that before year I prepared letter of engagement. This year I didn't prepare. So I can once again ask from the current management, please once again give me a confirmation that you still remember your responsibilities. There is an indication that management misunderstood their responsibility. I somewhere felt when I'm doing audit, they misunderstood the responsibility. So once again through written representation, I will ask them to confirm their responsibilities, and circumstances have changed, making reconfirmation necessary. Straight away they may ask you very important question, 4 marks or 5 marks question. So the auditor may ask management to reconfirm responsibilities to written representation. See, actually management will acknowledge, management will confirm its responsibilities through engagement letter. But there are some cases where they will once again reconfirm their responsibilities, that too through written representation. See, management responsibilities they always confirm through engagement letter, but here they are reconfirming through representation. One, when those who signed the letter of engagement is no longer responsible, no longer existing. The terms of engagement are prepared in the previous years, or there is an indication that management misunderstands its responsibilities, or circumstances have been changed, making reconfirmation necessary. Finally, the one part, Written representation about management responsibilities. Management must represent that it has fulfilled its responsibility for preparing financials in accordance with framework. Management has to give a specific representation that yes, they prepared financial statements as per applicable framework. You know, and the auditor may request management to include representation to provide accurate representation. Management may seek input from others. See, when they are giving representations on management responsibilities, sometimes they may take help of others, actuaries, engineers, all that. So that's it. Sometimes management may use qualifying language like to the best of knowledge and belief. You can accept this if at all the person who is giving representation is a knowledgeable person. A knowledgeable person only can use the word to the best of my knowledge and belief. Others cannot use it. That's it. And management shall also provide representation about completeness of information provided to the auditor. Management must give a statement that it has provided the auditor with all information and access as agreed in the terms of engagement. Management must represent that all transactions were recorded and reflected in the financials. So management has to give a representation that they prepared financial statements as per applicable framework. Management has to give a representation that they provided information completed to the auditor. Management has to give a representation that all transactions were recorded correctly, and management also shall give other representation supplementary in nature wherever auditor has requested. Next. That's it. With this 580 standard main theme is completed. From whom you get the representation? The auditor shall request representation from management who have appropriate responsibilities for financial statements and having knowledge of that matter. Written representation related to fulfillment of management responsibilities, all that. From whom? Where auditor believes they have knowledge of the matter, who are responsible for financials. Generally from them only we will get the written representation. That's it. With this entire 580 standard is over. Actually there is so much of in-depth discussion on the standard and all, but since it's a revision class, I need to save your time. So the crux of the standard I told you, I assume that you already know the subject. Okay, that's the reason I'm not talking many logics here. I'm only revising you in a simplest way so that you understand. That's it. Okay, with this the chapter completion and review is completed. All the 5 standards I completed within 75 minutes, 1 hour 15 minutes we completed. That to be discussed each and every concept. We didn't skip any concept. 90% of the concepts we covered. I hope you're happy with the revision, and I'll be very happy if you share your feedback on through comments, all that. That's it. All the very best. We'll come with another revision, okay, for another topic, audit evidence topic. That's it. 501. See, many students, when they see 501, 505, they think there are nothing. There is no simple standards. They're all nothing. Where nothing is there in that. But when they see the question in the examination, they will think of like, where is it coming from? So that's how the students generally like they will be shocked to see the kind of questions. So don't take these standards as a simplest standard. They are all very complex standards, and let's decode that. Let's revise each and every complex part of it. Now in 501. What is 501 standard is talking about? 501 talks about, the heading is this: audit evidence, specific considerations for selected items. Audit evidence, specific considerations for selected items. Now the standard has selected 3 items: inventory, litigations and claims, segment information. The standard has selected 3 elements. One is inventory. Just a minute, let me open that. So the standard has selected totally 3 elements. One, you see I have highlighted with the black color here: inventory, litigations and claims, segment information. 3 were selected. Now what we need to consider, because here the standard says specific considerations for selected items. Selected items we saw. Specific consideration what? For inventory, you need to get evidence on existence and condition. Whereas for litigations, you need to get evidence on completeness of litigations and claims involving the entity. Whereas for segment information, you need to consider presentation and disclosure. So for inventory, existence and condition, you need to get evidence. For litigations, completeness of disclosure of litigations and claims. Even for litigations and claims also, they are mainly talking about disclosure. For segment information also, they are talking about presentation and disclosure. So with respect to inventory, we should get evidence on existence and condition of the inventory. With respect to litigations and claim, completeness of inventory. With respect to segment information, presentation and disclosure. Now directly, first let me go to segment information, which is the simplest one. Segment information. So what auditor has to get evidence about? What auditor has to get? In the recent Jan exam also, segment information, I think this question, understanding of management methods, has been asked. Okay, fine. Anyhow, segment information, we know it refers to details about different products and services of a enterprise. Yes or no? Where are and its operations in different geographical areas. So what is the audit evidence? The auditor shall obtain sufficient appropriate evidence regarding presentation and disclosure of segment information. So every company will present segment information, right? How are they presented? How are they disclosed? Whether are they in accordance with financial reporting framework? That is what we need to obtain evidence. So we need to obtain evidence on segment information, whether the segment information is presented and disclosed as per applicable framework. Suppose if the company Ind AS is applicable, as per Ind AS, segment information presented clearly or not, you need to get evidence. Now, in order to get this evidence, what you need to check? See, segment information, I hope you might have understood. There are some methods on identifying segments, identifying reportable segments, some methods were there. So understand management methods for determining segment information. So management would have followed some methods, right? Management would have implemented some methods, right, to identify reportable segments. What methods they used? Whether test those methods. Like test, management would have told some asset method, profits method, revenue method, some method. Test them. You also find out how many reportable segments came and see what segments they reported, what are reportable segments, whether matching or not. Perform analytical and other procedures as necessary. Analytical process means last year how many segments were there, this year how many segments were there. If any segment was discontinued, discontinuing operations requirement and all, you should check. The auditor is not required to give separate opinion. By the way, just because we are checking segment information, are we liable to give any separate opinion on segment reporting? No need. This is one of the selected items which the standards on auditing felt important. One of the important item. They just asked us to get sufficient appropriate evidence on presentation and disclosure of segment information. Now, you need to understand methods which management used, right? When you're understanding the methods, there are some matters which are relevant when you're understanding the methods used by management. Whatever methods management used, testing methods we call them as methods for identifying reportable segment. Okay, whatever methods they're using, when you're checking those methods, keep in mind the following matters like sales, transfers, inter-segment transactions and eliminations, comparisons with budgets and expected results, allocation of assets and cost among the segments, consistency with prior period, adequacy of disclosure. This itself can be asked as a 4 marks question, or write about audit evidence for segment information. This itself can be asked as a 3 or 4 marks question. That's it. So this is one segment. This is one part in 501. Now, another important one, litigations and claims. What is the audit procedure regarding litigations and claims? First, what auditor has to do here? Auditor, what is the auditor's objective here? The auditor has to obtain sufficient appropriate evidence whether the impact of pending litigations and claims of the entity, were they completely disclosed or not? Completeness they need to. Yes or no? So, yes, next. Audit procedures for litigations regarding litigation and claims. Litigations and claims may materially affect financial statements and require disclosure or accounting. Okay, fine. Audit procedure. What are the procedures to identify? Enquiry of management and in-house legal counsel. This is most important. Straight away they can ask as a 4 marks question. Audit procedures for litigations and claims. First to know, enquire management. Dear management, what are all the litigations were there? What are all the pending cases were there against the company? Not only management, enquire in-house legal counsel. Some large companies and all, they will have internal legal team. So ask them. Review minutes of top management. Review correspondence with external legal counsel. Review legal expenses account. Like here you see minutes of the top management meetings to identify are there any litigations which they covered. Look at correspondence with external lawyers. So through this correspondence, the auditor might discover any other pending cases against the company. Review legal expenses account. Legal expenses means what? Ledger account will be there. For what are all purpose legal expenses were incurred to check out. Through that, you may discover some pending cases against the company and use risk assessment insights. The company would have already performed risk assessment, right? So get those insights. These audit procedures may also provide evidence regarding valuation or measurement. When you're checking existence of litigations, you may also get evidence regarding valuation. Getting it? That's it. Next. Sometimes direct confirmation is important. Direct communication is important with the external legal counsel. Sometimes direct communication. So when to seek direct communication? Actually this was asked for 3 marks question. And procedure for direct communication, like when to seek direct communication, what is the process for direct communication? These two put together, they might ask as a 4 marks question. Be careful. When the auditor will get this is one item. There is another context when meeting external counsel. See, one point is direct communication with them. Like we don't meet, you send a direct communication, say 505, you just send an external confirmation. When to do that? There are some cases where you want to meet them. When to meet them? For example, in certain cases, no, the auditor may judge it necessary to meet external legal counsel. For example, matter is a significant risk. So on the matter where auditor is checking, no, he felt that significant risk is involved and the case is being handled by external lawyer, so he may decide to meet them. Complex matter exists. Disagreement between management and legal counsel. Some issues going on between the management of the company and the legal counsel. Some issues going on between them. There is a conflict going on between them, or disagreement is there. I want to get a clear picture about what exactly the litigation is about. Then I will meet external legal counsel. In exam, they will ask you, under what? They have asked once more, under what circumstances the auditor may require to meet external legal counsel. In certain circumstances, in the following circumstances: when there is a significant risk, when the matter is complex, when there is a disagreement between management and legal counsel. In all these cases, the auditor may meet external. But remember, even if you want to go for these meetings, management's permission and management representative attendance is must. You can't directly privately contact external legal counsel without management's authority. So you must tell specifically to the management, get their permission, and go and meet to the external lawyers. And make sure that one of the representative of the management is also there along with you when you're meeting external legal counsel. This is meeting. Sometimes you want to send confirmation. When you will send direct confirmation? When you will directly communicate with them? When the risk of MMS is identified. If auditor felt that some MMS is possible in litigations and claims, you felt that company is omitting some material litigations, or audit procedures suggest some other litigation might exist. When I'm checking one case documents, I felt that this will have few more implications, few more cases also possible. Okay, you felt that. So you want to get a clear-cut opinion of the lawyer. So that time also you can communicate with external legal counsel. Now, suppose you want to do communication, right? How you can do communication? Through general letter of inquiry or through specific letter of inquiry. Letter of general letter of inquiry, letter of specific inquiry. What is general letter of inquiry? Very simple. General letter of inquiry, how I will send, I will draft mail like this. Sir, we are the auditor of so-and-so company. So we understood that you are the lawyer of the company. Kindly let me know what are all the cases that you are dealing with the company, and give a list of it. Like that, I'm generally asking him. I am not mentioning him which case he is dealing at, case names and all. I'm not talking. I simply mention I'm auditor of the company. Please give me list of cases that you're dealing. That's a general letter of inquiry. Many lawyers, they don't respond to a general inquiries like this. Now, if a lawyer is prohibited from responding general inquiries like this, then you will specifically ask them. Like specific inquiry. In case general inquiry, it is unlikely that external legal counsel responds. Like external legal counsel, they don't respond for general inquiry. The auditor shall use a specific inquiry, and in that letter mention the list of litigations and claims, management's assessments of the outcomes. Sir, these are the list of litigations which management told me that you are dealing. So dear Mr. Lawyer, you are dealing 10 cases about this company. For this company, this is what management told me, 10 cases. 5 cases they said contingency in nature, 5 cases provision is what they mentioned. So request them, request the lawyer, confirm management assessment. Like 10 cases you are dealing, sir, 5 cases like this is the status, 5 cases this is the status, this is what management told me, please confirm me whether management assessment is correct or not. So specifically mentioning list of cases and then sending them and asking them to confirm. This is specific inquiry where many lawyers will be willing to respond. So request that external legal counsel confirms management assessment and provide further information to the auditor if the list is incomplete or incorrect. So I will tell them, sir, these are the 10 cases which you are dealing. This is what company management told me, and the status of these 10 cases are as below. Like this is what management told me. Please confirm whether this 10 cases information correct or not as per your records. Also tell me if any of these cases not there, or if any other additional cases are, please give me. This is a specific inquiry. General inquiry means what? Through a letter of inquiry, ask external counsel to directly communicate with the auditor. If direct communication with auditor is prohibited for the ELC, external counsel, then perform alternative. What is the alternative procedure? If at all for a general inquiry, if legal counsel is not responding, then I will send a specific inquiry. Are you clear? So I hope now I don't know how many of you know this extent, know this depth that is there in the standard. SA 501, when they say nothing, very simple standard inventory litigations. This is the depth of the standard. I hope now you are able to understand. Okay, so in exams, no, they once specifically asked about letter of specific inquiry. In one of the exam they asked, in one of the exam they specifically asked about when meeting external legal counsel is required. In one of the exam, under what circumstances direct communication is required. This is asked for 2 marks and this is asked for 2 marks. Like this also they might ask. So be careful. Don't take it granted. The subject auditing is very in-depth. You must know how depth the questions will come. This is the syllabus. This is what there in the ICA book. Many students don't even know that this much depth is there. That is why they fail in audit. Many students fail in audit not because they are not able to understand the subject. They don't even know syllabus what it is. They don't even know how much is there, how much depth is there in the standard. That's it. You know, this was asked in one of the attempt. This was asked in one of the attempt. This was asked in one of the attempt. You can go and check in our question bank we gave. So be careful. Next, finally, now coming to inventory. So with respect to inventory, what auditor has to obtain? You must obtain sufficient appropriate evidence regarding existence of inventory and condition of the inventory. For example, here one point I will tell you. You know, company inventory is there in one godown. Auditor, no, he did not visit the godown. Instead of that, he saw existence of inventory through CCTV camera. So through CCTV camera, through photographs and all, he saw inventory whether they are existing or not. Is this a correct audit procedure as per 501? This is how a question has been asked in CA final. This is not correct. Through cameras and all, you may get evidence on existence, but you don't get evidence on condition. Sometimes MCQ will be asked. You know, when auditor is attending physical inventory counting, he need to obtain evidence on what? Option A, existence and condition. Option B, valuation and condition. Option C, valuation and existence. Option D, existence, condition, and valuation. Option A, only existence and condition of inventory. You know, valuation of inventory, whether correct or not, accounting standard is already there and we verify accounting standard. So we are not bothered about valuation. We are bothered about existence of inventory. Is inventory there physically, first of all? If it is there, in what condition it is there? Condition of inventory is important for valuation of inventory. If the inventory is in damaged or obsolete condition, then it is valued always at NRV. If the inventory is in good condition, then it is valued at cost or NRV, whichever is lower. Remember this principle. So condition of inventory is most important. So if you want to know condition of inventory, how can you check condition through photograph? How can you check condition of inventory through CCTV camera? You can't. So that is not an adequate audit procedure for 501 purpose. So what 501 says, you must obtain sufficient appropriate evidence regarding existence and condition of the inventory. For that, what auditor has to do? What is the audit procedure for obtaining evidence on existence and condition of inventory? The audit procedure is very simple. Attend physical inventory counting. Simple. Auditor attendance at physical inventory count. What he will do by attending? Evaluate management's instructions and procedure for recording and controlling. Look at what management instructions are. Look at how they are recording and controlling the counting. Like how are they counting it? What instructions management gave for counting? So whether are the counting procedures correct or not? First to look at. Inspect the inventory. Observe the count procedure. How are they counting? What management? First to look at the management instructions for counting. So, okay, management instructions and all seems logical. 2. Observe how they are counting. Are they counting as per management instruction? Check out. 3. You also inspect the inventory and you also perform test count. Like employees of the company will be counting and telling numbers and all. You also go to that rack and see whether that count is matching or not and reconcile with records. Physical counting is there, right? That count matching with the records or not. Inventory records will be there. Verify whether entity final inventory records accurately reflect the physical count result. And now when you are attending at physical inventory count, you need to inspect inventory for existence and condition and perform test count. Observe compliance with management instruction. Obtain audit evidence about reliability of management procedure. These procedures may be either a part of control checking or it may be part of substantive. So when you're attending physical inventory counting, the process of you're observing all this, right? This may be part of test of controls or this may be part of test of details. Anything it may be part of. Now matters relevant for attendance when you're thinking to attend physical inventory count. Suppose you decided to attend physical inventory count. There are some points that you should keep in mind. Like what is the nature of inventory? Is it a gold? I mean, if it is a jewelry business, it's a gold. Is it cotton or is it rice product or is it any industrial iron or oil? What exactly? What is the stage of completion of work in progress? What is the risk involved? Internal control system, whether proper procedures and instructions are given for counting, timing, when they are counting, 31st March or some other data, location of inventory, materiality and risk at different locations, need for an expert, whether entity using perpetual inventory records. So what are the matters relevant for attendance at inventory counting? 5 points. There are so many points were there, any 5 points you write, that's sufficient. Sometimes no, company may not be doing inventory counting on 31st March. They might be doing inventory counting on some other date. What procedures extra you need to perform when inventory counting is at other than balance sheet date? If physical inventory counting occurs on a date other than financial statements date, then auditor has to perform additional procedures. Same, the above procedures you will perform. You will check management instructions, you will check how they are counting, you will test check inventory, you will inspect the inventory, all that you will do. In addition to that, since inventory counting is conducted at April month or May month, not on 31st March, intervening between these dates, what are all the transactions happen, whether they are properly recorded, auditor must perform additional procedures to ensure changes in inventory between count to date. For example, counting is on 15th April and balance sheet date 31st March. Are they properly recorded or not? I will check. So on 15th April, if inventory physical inventory matching with records, perfect. Now between 31st March and 15th April, what are all inventory movement is recorded, whether that is proper or not, check out. Then automatically you will get an evidence on 31st March inventory. Next, relevant matters auditor should consider to verify changes in inventory, whether perpetual records are maintained, reliability of perpetual inventory records, reasons for differences between physical count results and perpetual records. So this itself can be asked as a straight question, 4 marks question. What are the additional audit procedures if inventory counting is performed at a date other than date of financial statements? The auditor has to perform additional procedure to see that changes in inventory between the count to date 15th April and 31st March are properly recorded. And next, second one, additional procedures, especially to verify changes in inventory. They said, right, to verify changes, no, additional changes in inventory has been correctly recorded. And how do you verify, how do you know changes are correctly recorded? See whether perpetual inventory records are properly adjusted. For 15 days, whether perpetual records are adjusted correctly. Reliability of those records. How do I know perpetual records are reliable? I will see the actual transaction. Whenever an order is received, first records are updated, then goods are delivered. Like that. Reasons for difference, if at all, there between the physical count and perpetual records. Remember, in a perpetual system, physical inventory must match with records. There should not be any difference. If there is a difference, why there is a difference? Auditor has to investigate. So this itself can be asked as a 4 marks question. Sometimes, auditor may not be able to attend inventory. But before this, let me talk about when inventory is in the control of third party. Let me talk about inventory under the control of third party. Inventory under the control of third party. If inventory is under custody and control of third party, for example, inventory in transit, inventory with a job worker, inventory with another company, goods sent on sale or return basis, inventory lying with warehouse, Amazon warehouse. For example, many sellers, many manufacturers, their inventory will be lying with Amazon warehouse, their inventory will be lying with Flipkart warehouse, like that. Okay, so if at all inventory is with third party and is material to the financials, the auditor must obtain sufficient appropriate evidence regarding their existence and condition by following methods. 1, direct confirmation from third party about how much quantity he is having, what is the condition, or another process, directly you go and inspect or perform other procedures. You inspect or perform other procedures appropriate. Sir, what are other procedures, sir? What are other procedures, sir? Examples of other procedures. In one of the exam they asked this. MCQ they asked in one of the MTP. Which of the following is not an example of other procedure? See, when inventory is with third party, auditor may perform either one of the following or both the following. 1, get a direct confirmation regarding quantity and condition. 2, perform inspection. You go directly inspect, or other audit procedures as appropriate. Other audit procedures means what? 4, inspect documentation such as warehouse receipts regarding inventory held by third party. Like, what is the proof that inventory is with third party? Request confirmation from other parties if inventory is pledged as collateral. Attend or arrange another auditor to attend third party. Obtain a report from another auditor or service audit report on adequacy. So inspect documentation such as warehouse receipts. Request confirmation from other parties. Attend or arrange another auditor to attend third party count procedure. Obtain report from another auditor or service auditor report. Suppose if the company inventory is kept in Amazon, Amazon will give an audit report, service auditor report. There is a report called 3402, SOC1 report, SOC2 report, like that some reports and all were there, which we will discuss in CA final. So when inventory is with other third party, request confirmation, directly go and do inspection or other procedures. Other procedure means what? Like, check the documentation. Request confirmation from other parties if inventory pledged as collateral. Attend third party physical count procedure. Third party is doing physical counting, right? Go and attend or send somebody else or get a report from another auditor or service auditor on adequacy of third party internal controls over inventory. So get an evidence on counting, inventory controls, attend physical inventory counting done by third party, inspect documentation, or if the inventory is pledged as collateral, get a confirmation from them. These are examples of other audit procedures. In exam they will ask you specifically this question, 4 marks. Our students will go and write some answer and come and thinking that that is right answer, but see how specific the standard is drafted. That this is the kind of clarity that you require. See, since it's a revision class, I can't give more, I can't discuss more, but still I'm almost from past 20 minutes I'm discussing this. Now finally, sometimes auditor may not be able to attend the inventory. Suppose companies counting inventory on some other date, and on that date you are unable to attend. In such a case, if auditor is unable to attend physical inventory counting due to some unforeseen circumstance, then conduct or observe inventory count on an alternative date and perform procedures on intervening transactions. Suppose if inventory counting is impracticable means what? You can't go there at all. Auditor, there is a threat. If attendance at physical inventory counting is impracticable, then the auditor has to obtain evidence on alternative procedures. Modify the opinion if alternative procedures are not possible. Impracticality may arise due to nature of the inventory or location of the inventory, such as safety concerns at the site. By the way, what is not impracticality? Auditor is feeling difficult to go there. Auditor feel time waste. Auditor saying, no, inventory counting is costly. This is not a reason for impracticality. General inconvenience is not a valid reason. Now, what are the alternative procedures? Look at the documentation of subsequent sale of inventory. Suppose you can't go to the location of inventory because inventory location is at some location where war is happening right now. So it is not at all advisable for the auditor to go there. So it's impracticable. But how do you know inventory is there at that location? See, April month, May month, some sales were there from that godown. Sales were there means in the godown inventory is physically there, right? So that is called subsequent sale. Perform other valid procedures if practicable to verify existence. If evidence cannot be obtained, sir, alternative procedure also not possible, sir, then modify the opinion because there is a limitation on the scope. You are unable to obtain evidence regarding inventory you're lying in the godown, and you are unable to perform alternative procedure also. Therefore, you will directly give the modified opinion. That's it. 501 is over. I hope you are confident on 501. You see how much is there in 501? Let me show you the similar thing in 505 also. Like so many students have misconception. 501 very easy, 5 minutes or 10 minutes. 505 very easy, 5 minutes or 10 minutes. No, there are all so many complex things were there. This is how in exam they test. Even in 505 I will tell you how they tested in the recent exams. Now that's it. So with this 501 is complete. I hope you are clear on 501. Just a minute. I hope you learned some new points. Just a minute, ma. Next, yeah, SCA 505 external confirmation. This is one standard where everybody thinks I know everything about the standard, but I will show you so many points which I think you might have neglected. Don't worry. External confirmation means what? Direct confirmation by auditor with the third party. Okay. Now, what many students think is external confirmation is what? A PCR will be there, positive confirmation is there, negative confirmation is there. That's it. No, that is very minimal. That's a very basic element in the standard. There are many things which are tested in the past exams, okay, which many students fail to pay attention. Now look at external. What's an external confirmation? Audit evidence which is obtained as a direct response to the auditor from a third party. From a third party, auditor is getting direct response, okay, to the auditor either in paper or electronic form, whatever it is. So then that is called as an external confirmation. Okay, like what is external confirmation? First, what is the external confirmation procedure? Where and all I use external confirmation? External confirmation procedures are generally used to confirm or to request information about some account balance and their elements. They can also be used to confirm terms of the agreement, contracts, transactions, absence of the conditions like side agreements. Are there any side agreements and all? Okay, so external confirmation can be used for confirming or getting information about account balances, their elements, transactions, terms and conditions, anything. Now, what is the procedure? First, identify the information. What is the external confirmation? First, identify the information. For what information you want confirmation? Sir, creditors, sir. I want information on creditors. I want information on debtors. I want information on inventory lying with third party, sir. Okay, identify the information. Now, select the conforming party. Appropriate conforming party. I know third party organization is there, but inside that who should reply? From whom you, to whom you should ask this confirmation? Accountant, finance manager, CFO of that company. Who has to? So responses are more reliable when external confirmation request is sent to a party where auditor believes is knowledgeable about the information. So according to me, he knows in that organization, in that creditor organization, debtor organization, so and so manager, accounts manager knows about the information which I want. So then identify that party, then design the request. Design the request. When you are designing the request, there are some factors. This itself was asked as a 4 marks question. Request. The external confirmation request must be properly addressed, and you must also include written information for direct response. When you are sending a mail, you should clearly tell to whom they should reply. Reply mail ID also you should clearly mention. Okay, now the design of confirmation request affects the response rate and reliability. How you are designing that affects response rate and reliability. See, you need to make sure third party job simple. When you are designing the request, you fill the amount, you mention everything and tell them, sir, please, whether you agree or disagree, you just reply. There are two types of designs. There are two design formats. External confirmations are broadly two types. There are two methods: positive confirmation request and negative confirmation request. In a positive confirmation request, third party has to respond whether he agree or disagree with the information. Whereas in a negative confirmation, the third party will respond only when he disagree. Now here, when you are designing the request, see, it may be positive or it may be negative. When you are designing the request, in a positive, how will I design? Sir, I am the auditor of so-and-so company, sir. In our company, your account is having a credit balance. Means he is a supplier. Our company has to pay him. So in our books of accounts, we found out that we are liable to pay you 10 lakh rupee as on 31st March. Kindly reply whether in your books of accounts, how much balance is there. I will ask him, sir, how much balance is there in your books of accounts? I will put a blank and then send him. Send. Some third parties, they will not respond if you ask them to fill the amount. If you ask them to fill the amount, they will not respond. Suppose you ask them, sir, 10 lakhs is there in our books of accounts, sir. Will you agree, yes or no? Just tick and send me. They may respond. This is a designing. See, here also, you see, positive confirmation request, it can be with a blank or it can be with a number, and where we may ask him yes or no. Both are positive only. In negative, what happens, sir, in our books of accounts, 10 lakhs is the outstanding balance, sir, as on 31st March. Please respond if the amount is not correct. Please respond if the amount is not correct. If you do not agree with this, with the information, see, we are sending request, right? Confirmation request, right? Inside that some information we put, right? If with that information in the request, if third party don't want to agree, then only he should respond. That is NCR format. Able to understand? When NCR will be used, that point we have. There is a specific question asked in past examination. Under what circumstances negative confirmation request can be used? That specifically we will discuss. So, look at, so the design of the request affect the response rate. If at all responding is made very easy, the third party has to simply reply yes or no. They will respond very fast. If at all third party has to take some pressure, they have to take some stress, they need to open their books of accounts and fill the amount. If that is the way you are asking, they may not respond. So the design of request affect response rate and reliability. So when you are designing, you should keep in mind the following points. What assertion you are addressing? Assertion means, are you talking about the existence of account balance or are you talking about valuation? Which assertion you are addressing? Accordingly you should design. And identify the risk of MMS, layout and presentation of the request, past experience on civil audit, method of communication, management's authorization for confirmation parties, ability of the confirming party to provide requested information. Some third parties, the person manager may not have the authority to respond. So that is also important when you are designing the confirmation request. See, management authorization, method of communication, paper, mail, past experience, layout and presentation. You may use a positive format or negative format. Within the positive format, you may put a blank and then ask them to fill, or you mention the amount and ask them to respond yes or no. All these points you should keep in mind. See, if you are checking overstatement, then there is a way to ask. If you are checking understatement, you are worried about risk of understatement, then there is a way to design the request. So there are so many elements you need to consider when you are designing the confirmation request. So these are the factors. Any 4 points, 4 marks question they'll ask. Any 4 points you need to write. Straight question like this can be asked. So okay, you design the request. Now send it. Now send the request. Okay, sir, I sent, sir. Send the request, including follow-up request as and when needed. Generally, follow-up request will be there in positive confirmation request format. In a negative confirmation format, follow-up request may not be there. Okay, next. Ensure requests are properly addressed and validated addresses before sending. In exam, they might ask you, write about sending the request. Use additional or follow-up request if replies are not received within reasonable time. To enhance reliability, use positive confirmation requests that do not state the amount. You see, don't mention amount. In a positive confirmation request, tell the third party to fill the amount and send. But if you do like this, it may reduce response rate due to extra effort is involved. So generally, the best way to send a confirmation request is, sir, we are the auditor. As on 31st March in our books of accounts, there is a liability for you that we need to pay some amount to you. Oh, blank amount. Put a blank. Please fill the amount that we have to pay as per your records. Third parties may not respond for these kinds of requests. This layout and presentation is not acceptable for third parties because they need to put the amount. Some third parties, what they feel, if I put a wrong amount, a company will pay lesser amount to me. Like that, they'll be having some fears. Next. So what is the procedure? Very simple. First, determine the information. Identify appropriate confirming party. Design the request. Send the request including follow-up request. Over. This is the external confirmation procedure. Standard is not yet over, my dear. There is one more definition. Exception. There is a definition called exception. Many students don't know this. Exception definition is there. So that we will discuss now. Next. Negative confirmation request. What is a negative confirmation request? In a negative confirmation request, I will send confirmation request to the third party. In that information, I will mention like this. Sir, in our books of accounts, the account balance is like this. Please reply if you disagree. Ignore otherwise. Non-receipt of reply within 3 days. Non-receipt of reply within 3 days. We assume that you agreed with this. Like that we will mention and then send. Now, 3 days over. Third party did not respond. We assume that third party agreed. But tell me, did third party explicitly agreed? No. You see, negative, see, that's why sometimes what happens, you send a negative request. Third party has not at all seen the mail. Third party has not seen the mail at all. He didn't open at all. He was on a vacation. But actually, our client books of accounts and third party books of accounts, there is a lot of difference. And when you investigate, you will know that our client books only wrong. But what happened, you sent a negative request, third party did not reply. So what auditor felt, everything is matching, our client books of accounts are right. So that's why negative confirmation request is very dangerous. Negative confirmation request provide less persuasive evidence. It is less convincing than positive confirmation request. Auditor shall not use NCR. Negative confirmation request you are prohibited to use unless all the conditions below are satisfied. All the following conditions must be there. Then only in that scenario, in that class of transaction, in that account balance, negative confirmation can be used. Assessed low risk of MMS and obtain evidence of control effectiveness. In our client, no controls are effective, and on the debtors or creditors, you got an evidence that low risk is there. Population includes small items. They're all small items. Low exception rate is expected. Exception rate is low. What is exception? Exception rate is low, I agree. What is exception? Generally, exception means what, See, here you see, exception means difference between. Exception means what? Difference between information requested by auditor or contained in entity records and information provided by third party. So, I sent a confirmation request, right? Inside that, I mentioned some amount. Third party also replied. He said that amount is same. No difference. Then there is no exception. Suppose, I mentioned amount 10 lakhs. Third party said, no sir, it is not 10 lakhs, sir, it is 11 lakhs. Now there is an exception. Information requested by the auditor and information provided by the third party, if there is a difference between them, then that's an exception. Generally, what information I request third party? Whatever information is there as per our company records. In our company books of accounts, what amount is there? That amount only I will request them to confirm. So that's why information requested by the auditor are contained in entity records and difference between this and this. That's why you see difference between yellow and green letter, which I highlighted here. So whenever there is a difference, no, you must analyze, and what is its impact on the entire population, you should check. Sometimes, no, see, remember, in our books of accounts, his balance is 10 lakhs. He replied saying 8 lakhs only. Can I straight away say our client books of accounts are wrong? No. See, when you sent a confirmation request, third party replied disagreement, that he did not agree with this. Disagreement is an exception. That's not misstatement. Many students will think if third party replied with a different amount, then our books of accounts are misstated. No, wrong. You need to investigate further why there is a difference between our records and third party records. Sometimes third party records might be wrong. So that's exception. Now, if you think exception rate is low, if the exception possibility is very low, there also you can send NCR. Exception rate low means what? Array, last week only both of them conformed with each other. This week no transaction happened. So obviously the exception possibility is very low, and no conditions exist that indicate that recipients will disregard the request. I know very well, if I send a NCR, he will definitely see that. And if at all he ignore this, means if at all I did not get reply within 3 days, means I for sure know that he considered this. So that's it. If these 4 conditions are satisfied, NCR can be used. Now suppose you sent a negative confirmation request, you did not receive any response. You did not receive any response, right? Non-receipt of a response means generally what you assume that everything is matching. But do you know explicitly the third party agreed this? No. Non-response to NCR does not explicitly confirm receipt by third party. In the recent CA final May 25 exam, these were asked in MCQ SMA. In the recent May 25 CA final, these points were asked in MCQ. So depth. Okay, and this point was there even in CA Inter. Many, in MTPs and all, they tested once. Non-response to NCR provide significantly less persuasive evidence. So to an NCR, if you don't receive any response, what does it mean? Agreed or third party has not seen? What does it mean? We don't know. So there is no explicit confirmation here. He didn't respond. So explicitly we don't know whether he agreed or disagreed. We don't know. Recipients generally will respond if the information is not in their favor and less likely to respond otherwise. They will respond when they want to disagree, which is favoring with them. Suppose if information what we sent is not in their favor, then they will immediately respond. Suppose if the information as per our records is favoring them, they may not respond. So NCR, you did not receive any response. There are so many interpretations on it. That's it. So non-response to negative confirmation request, how should auditor interpret? This itself can be asked as a 4 marks question. This itself can be asked as a 4 marks question. And under what circumstances NCR can be used? This itself can be asked as a 4 marks question. Finally, evaluating evidence obtained through external confirmation. You know what? The second point is there, right? Again, there is an MCQ in CA final. In the recent May 25, in CA final, they have asked this. Array yaar, CA Inter standard they tested in final. So there is a high possibility that in CA Inter also they will test. They tested it already. So now, whenever you are performing external confirmation, you might have got some result. The third party would have replied or not replied, or something would have been there. Please evaluate the results. Okay, whether the external confirmation have given you reliable evidence and relevant evidence, check out. See whether any further procedures are necessary. When you are evaluating individual confirmation request, like each confirmation request when you are evaluating, you can categorize the external confirmation result into 4 categories. The results is categorized into 4 parts. Response by third party, indicating agreement. Third party responded, everything is matching. Or a response, third party responded where you felt that is not a right response, you felt unreliable. Or non-response, third party did not respond. Exception, third party responded, but difference is there in the information. Like he gave some other information which is not matching with your records. So the result of external confirmation can be 4 categories. 4 categories. 1, agreement by third party. D, disagreement by third party. 3, third party reply is not reliable. 4, he didn't reply at all. That's it. Next. So the auditor's evaluation combined with other process helps in determining whether, so after looking at these results, you may have to decide whether further audit process may be required or not. You need to check out. That's it. 505 is over. Now finally, one more point. Sometimes management refuse to send external confirmation to 1 or 2 parties. Okay, they may say, sir, some issue is going on. Now if you send external confirmation again, so the client might misunderstand. Let's not. Okay, so the auditor shall inquire. If management is refusing, inquire the reasons about management's reasons for refusal and see whether that is valid and reasonable. Look at the evidence. Reasons for refusal may include some legal dispute going on or some negotiation that going on. So the auditor must seek evidence to validate the reasons. How the refusal impact the risk? Modify the nature, timing of procedures and get alternative. You want to get evidence through external, where external is not possible, so try to perform alternative procedure. So perform alternative procedure. And if management refusal is unreasonable, communicate with the top management, those charged with the governance. Further, such a refusal sometimes may indicate fraud risk factor. And what is its impact of refusal on auditor's report? Check out. Sometimes you may have to give a qualified opinion or disclaimer of opinion if the refusal is unreasonable. That's it. 505 is over. Tell me honestly, how many of you found out many new points in this? Imagine in a 15 minutes revision, I showed you so many new points. Remember, this is not something I'm discussing out of the box. This is there in the ICA book. Cross check. Right now, open ICA book and cross check. So many students, they were misguided by showing all this standard simple and nothing. Don't believe. Be clear. This is the depth of the standard. Mark my word, tomorrow exam you will find many advanced questions where some students might feel that it's not there. But don't worry, you all followed this, you all listen to this, you will not feel surprised if a question comes from in-depth corners of the standard. That's it. I hope you understood thoroughly 505. Next 510 initial audit engagement opening balances. So now, by the way, once just let me open. So 501 inventory completed, litigations and claims segment. 505 important definitions we understood, confirmation procedure, factors for designing confirmation request, management refusal, NCR, can we use a negative confirmation as audit to 4 conditions, evaluation of evidence. All these points we understood now. Correct? Now we will discuss 510. In 510 standard heading is what? Initial audit engagement opening balances. Initial audit engagements hyphen opening balances. Initial audit engagements dash opening balances. So this is the heading of the standard. 550 related parties. That's it. No more related party disclosures. No. Related parties. That's it. What is related party standard? We'll discuss later. Okay. 510. First, we need to understand opening balance definition. And there is a definition for initial audit engagement. First, we need to understand the definition. Then we need to understand what is the audit procedure for opening balance. Then we need to understand how to conclude and report, and to what extent audit procedures has to be performed for opening balances. What is the nature and extent of audit procedure for opening balances? That all, these 4 points we need to cover. Okay, in 510. So that's it. Just 2 minutes. Be online. I will be continuing. Just be online. 2 minutes. Yeah, somebody saying the book which they are following, many points are missing. Yeah, that's a problem. Many students were misguided with improper books. They say 100% ICA syllabus is covered, but not. Many, I should not say this, many faculties, some concepts which they can't explain, they remove it from the book. So that is something very serious sin. Fine. I'll go with 510 now. 510. What is 510? Initial audit engagement and opening balance. What is initial audit engagement? First time I'm doing audit of this entity. That's an initial audit engagement. And initial audit engagement. First time I'm doing audit for a particular client. That's an initial audit engagement. Or previously there is no auditor at all. Simple. There are 2 cases. Previously, the financial statements of the client were not at all audited, and I'm the one who appointed right now for the first time. 2, previously some other auditor was there, now I replaced him. Both these engagements are called as initial audit engagement. And when you are performing an initial audit engagement, you must obtain evidence about opening balances. That's very severe. Now, initial audit engagement, an engagement where prior period financials are not at all audited, or they were audited by predecessor auditor. That is called as an initial audit engagement. Opening balance means what? Opening balance means what? Account balances which are existing at the beginning of the accounting period, which are based on the prior period closing balances, last year closing balances carry forward. No, that itself is opening balance. Not only that, opening balances reflect prior period transactions, events, and accounting policies. Opening balance also includes matters which are just disclosed in the last year balance sheet P&L, notes to accounts, disclosures were there like contingencies, commitment disclosures. They will also be treated as opening balance. Remember, the definitions are important for MCQ purpose. Next. So what is the objective? Very simple. In an initial audit engagement, the objective is, you have to obtain sufficient appropriate evidence about whether opening balances contain misstatements which might affect the current period financials. Accounting policies, are they consistently applied? And if there are any changes to the accounting policies, whether the changes are correctly reflected. So first let us look at accounting policies point. Directly auditors' conclusions and reporting I will see. Okay, reporting on accounting policies. Very simple. See, we have to get an evidence that last year whatever accounting policies were there, whether the same is followed. Sometimes changes will happen. Okay, changes, but let it be. Whether the changes in accounting policies were properly accounted and disclosed. If at all they were not properly accounted or not properly disclosed, then we should give a modified opinion, qualified or adverse opinion. If the auditor conclude current period accounting policies are not consistently applied, or changes in accounting policies are not properly accounted for or not adequately disclosed, the auditor must express a qualified opinion or adverse opinion. You have an evidence here. Accounting policies are not consistent, or there are some changes which are not properly accounted. Therefore, we must give adverse opinion or qualified opinion as the case may be. Sometimes, reporting on opening balance. Directly, first let me talk about reporting on opening balance. Then I will talk about audit procedure. Reporting on opening balance. If you are unable to obtain evidence regarding opening balance, you are not getting evidence on opening balance. The auditor will express a qualified opinion or disclaimer of opinion. Suppose opening balance are materially misstated, which is affecting current period financial statements, and they are not properly accounted for or not adequately disclosed, the auditor must express a qualified opinion or adverse opinion as the case may be. See, if you are unable to obtain evidence, disclaimer of opinion. You have an evidence that they are materially misstated in the current period, adverse opinion, worst scenario. Either qualified or adverse. Qualified disclaimer, qualified adverse. You see, part 1 revision audit reporting, I told where qualified opinion will come, where adverse opinion will come, where disclaimer will come, I clearly told. Next. Now, what is the audit procedure for opening balance? Verify that prior period closing balances are correctly brought forwarded or disclosed as a prior period item. See whether last year closing balances were they correctly brought forwarded. How do I know? How do I check? Perform one or more of the following procedure. Review audited financial statements of the prior period. Last year audited balance sheet is there, right? Check that with the current year opening trial balance. Like, evaluate whether current period processes provide evidence. Current period, no, some payment made to debtor. Opening date in April and May month, some payments were made to debtor. They were belonging to last year balances. See how much amount is paid. Oh, this much amount paid in the current year means last year outstanding amount is correct, right? Conduct specific procedures for opening balance. Specific procedure for opening balance means what? Opening trial balance we will match with last year audited balance sheet. Assets and all debit side of the trial balance. Liabilities and all credits in the trial balance. Like that we will tick. We will match like this. That's it. Next, suppose if auditor obtains evidence for misstatements in opening balance which will materially affect the current period, then perform additional procedures. Do go in depth, verify further to know what is its impact. If auditor concluded MMS exists, the auditor shall communicate to the management and top management, ask them to rectify the financial statements, ask them to show it as a prior period item. If they rectified and showed it as prior period item correctly, they accounted, then no problem. I will give unqualified opinion. Now, what is the nature? So what procedure we need to perform? We understood now. So what is the procedure for opening balance? 4 marks. Conclusions and reporting, straight away they can ask it as a 4 marks question. Now we are discussing about nature and extent of procedures. To what extent I will perform opening balance? The nature and extent is dependent upon accounting policies followed, nature of account balance and transaction, risk of MMS involved, significance of opening balance to current period. Suppose last year only we started business, no much business happened in the last year. So in the current year, opening balances may not be significant. So we just briefly verify whether predecessor auditor's opinion was modified. One more important thing, last year auditor gave a modified opinion. So then opening balances might play a very major role in the current year. So that also you should see. So factors affecting nature and extent of audit procedure, 4 marks question straight away. What are the factors that affect nature and extent of audit procedures for opening balance? What accounting policies they are following? What is the nature of accounting balance? Significance of opening balance? Whether prior period auditor has given modified opinion. Suppose no, last year financials were audited by previous auditor. The auditor can obtain sufficient appropriate evidence by reviewing audited financial statements of the last year, review supporting schedules and all. And reliance on ordinarily you happily trust last year closing balances unless current period procedures indicate some misstatements. Generally you are eligible to trust last year closing balances because last year somebody has audited, so you don't have to doubt them. By default you can trust that they are free from MMS. But in the current period you found some mistakes might be there in the opening balance, then only you will not trust it. For current assets and liabilities, evidence for current asset liability may be obtained during the current audit. Like how in the current audit evidence we get regarding current assets and liabilities. For trade receivables and payables, no, in the current year collections might be there or amounts might have been paid. That itself is an evidence for existence. Inventory, current year procedures may not provide sufficient evidence regarding opening inventory value, therefore additional procedures are necessary. With respect to inventory, no, generally in the current period, current year purchases and sales, if you're checking, you may not get evidence regarding opening stock. So for opening stock, if you want to get evidence, you need to perform additional procedures. First, do inventory counting and reconcile till opening balance. Perform process on valuation of opening item, test gross profit and cutoff. So for inventory, you may not get evidence by performing current procedures. You may not get evidence regarding opening balance in the current period. You may have to perform additional. Do first physical counting, trace back to opening balance all the transactions, and do valuation and perform cutoff procedures. That's so you can get evidence on opening value of inventory. For non-current assets, no, okay, the evidence can be obtained in current period. Examining accounting records and underlying information, using confirmation with third parties, and additional. I think this non-current point is not that important, but this inventory point is very important. MCQ it might be important. So MCQ it might be important. That's it. Fight and standard is over. Who is a predecessor auditor? Predecessor auditor is auditor from another firm who audited the last year financials and is now replaced with you. You are the current auditor. So since you replaced the previous auditor, for you it is a first time audit. That's why it's called initial audit engagement. But we apply the standard even if it is a recurring engagement. Not just in initial audit engagement, we apply the standard, we follow the standard even if it is a recurring audit engagement. That's it. Fight and standard is over. Next, 550. I don't know whether I'm giving you additional points, all that I don't know, but I hope I'm giving you I hope I'm giving you crystal clear clarity in the shortest time. You see, 50 minutes hardly. We covered almost 3 standards, that 2 big standards, 501, 505, 550. Many of you, whoever thinks they're nothing small, easy standards, now you might have understood how lengthy these standards are, how much content is there inside these standards. That's it. Just 2 minutes, we'll continue 550. I'll be happy if you reply me, whether you're understanding or not, whether you're able to revise quickly or not. Yeah. Now, so look at this. 510 is over. Now 550. There are totally 5 concepts that we need to understand in related parties. Now, first we need to understand definition of related party. Many do not pay attention to the definition. Definition of related party is very important. Okay. Then what kind of related party relationships? You know, here there is a word called RPRT. Related party relationships and transactions. Related party relationships and transaction. Nature of related party relationships and transaction. That we need to understand. Then we need to understand understanding of entities, related party relationships and transactions. Existence of related parties. Small entities, how related party relationships and all will be there. Next. Now, meaning of related parties. You know, actually, many students think that related parties means we need to check disclosure requirement. Wrong. Here, the standard mainly deals with auditor responsibilities relating related parties. Specifically, it applies in relation to risk of MMS due to fraud. Most important, fraud risk factors in relation to related parties. That is what the primary focus of this standard. Now, what do you mean by related party? The standard first, what it says, follow applicable financial reporting framework definition. Suppose if accounting standard defines related party, follow accounting standard definition. If Ind AS defines related party, follow the definition. Suppose if the framework is silent, suppose if accounting standard there is no related party requirement, or if Ind AS does not talk about related party, actually in reality they are talking. So auditing standard related party definition is useless basically. But in exams, MCQs, they might ask MCQ. In one of the MCQ they asked this note point. In one of the MCQs they asked this note point. Okay, so now related party means what? If at all financial reporting framework is silent, so who are related parties? Very simple. A person or entity that has control or influence over reporting entity. Reporting entity means the entity where we are reporting, means our client. On our client, did somebody has control? Did somebody has influence? They are related party. Okay. Another entity over which reporting entity has control. Another company is there. On that company, our client has a control. Our client has an influence. They are related party. Another entity under common control. There is another company. Along with this company, there is another company. We both are under common control. Through common ownership, close family member, common. Like these are nothing but sister concerns. These are nothing but sister concerns. They are also related parties. Means the company which is controlling me or influencing me, or the company which I am controlling or I am influencing, or another country, another company where me and that company were controlled commonly by somebody. Means sister companies. These are all related parties. Now there is one exception here. Entities under common control of a state. State means what? Here it's not state government, central government, not that. State means government, that's it. Entities which are under common control of a government, they are not treated as related parties unless they involve in significant transactions and sharing of resources. So companies which are under common control of a government, they are not treated as related parties. Okay. However, if they engage in significant transactions with each other, then they will again be treated as related parties. So just because government is having common ownership in many companies, you can't say each company is related party to each other. No, that's it. Now, control means what? Govern the entity and operating policies. Significant influence means what? You can participate. If you are having power to govern, then that's control. If you have a right to participate, then it's influence. Now, how do you know that there is a control or influence? Other equity holdings we have. In that entity we have equity ownership. Financial interest is there. Holdings of other financial interest. Being part of top management or being a close family member of top management. Significant business relationship with key management. So in all these way we can have control. They may ask you as a 4 marks question. What are the factors? They may ask you, define control and significant influence, and what are the indicators of control and indicators of significant influence? They may ask you this entire segment as a 4 marks question. Next, some related parties will be there with a dominant influence. Related parties sometimes can exercise dominant influence over our company. This is relevant in assessing risk of MS due to fraud. Is there any related party who is dominant in the company? And I need to know what kind of transactions happen with them. Are there any fraud risk factors in that? Now, this SP points relevant, special purpose entity point irrelevant, not required. Now, nature of related party relationships and transaction. Many related party transactions, most of the related party transactions, they will happen just like a normal unrelated party transaction. Most of the related party transactions occurs in normal course of business and may not pose any higher risk. Okay, compared to unrelated parties. What kind of risk is there in unrelated party transaction? The same level of risk will be there in related party. Generally, most of the related party transactions are just neutral, normal like unrelated party transaction. The nature of related party relationship can sometimes result in higher risk of MMS. Some related party transaction may give higher risk. For example, related parties may have extensive complex structure. Like some related parties, they are not direct related parties. A complex structure is there. Information systems may fail to identify or summarize transactions and outstanding balances. Some related party transactions may not follow market terms and conditions. In all these cases, high risk will be there. Most of the related party relationships and transactions may carry no special risk. They will be ordinary. But in some cases, related party, the nature of relations and the nature of transaction can sometimes result in higher risk. Example, complex relation. Ineffective information systems like our computers, our systems are not capturing related party data, or related party transactions are happening at non-market terms. In all these cases, the related party relationships and transactions carry higher risk. They may ask you in exam, right? Generally related party transactions may not carry higher risk compared to unrelated party, but there are some circumstances where related party relationships and transactions may carry higher risk. Explain. You need to write this entire point B. They're indirectly asking you nature of related party relationships, nature of related party transaction. This question they're asking. Next. So that's why you need to understand who are all the related parties of the entity, what transactions happen with them. So the identify, the auditor shall inquire who are the entities related parties, are there any changes compared to last year, what is the relationship between the entity and related party, are the holding, are the associate, are the joint venture, what exactly, whether entity entered into any transaction, if so what is the type of transaction, purchase or sale or loan, what is it, and what is the purpose of the transaction. So the auditor shall inquire who are the parties, are there any changes compared to last year, are there any transactions, what kind of relationships we had, are there any transactions with them, if so what kind of transaction, how much amount involved, what's the purpose. The auditor shall do risk assessment procedure, obtain an understanding of controls established to identify and disclosure of related party. So they may ask you, write about risk assessment procedure for related party, 4 marks question they might ask you. Or they might ask you this itself as a 5 marks question, write about understanding of entities, related party relationships and transactions. This itself they can ask you as a 5 marks question. Next, SS controls for authorizing and approving significant transactions. See, in the company what kind of controls are implemented to approve related party transaction. Evaluate controls for authorizing and approving significant transactions. See, are there any outside the normal course of business, any transaction, what controls the company has implemented, how they are authorizing that, check out. And verify existence of related party. How do I know whether there are related party transactions in the company? First I will ask company, how do I verify existence of related party? I will look at income tax returns, I will look at information filed with regulatories, I will look at shareholder records, I will look at agreements with top management, I will look at significant contracts and agreements, I will see invoices and correspondence, I will see life insurance policy and see who is the nominee and on what people they have taken. I will see just a minute, I will see internal auditors report, I will see the filings with regulators, I will see shareholder register. So any 5 points, what are the records and documents you will inspect to identify related party relationships and transactions, any 5 points you can write. The auditor has to be alert for related party information while reviewing records and documents. So you have to be you have to be very alert throughout the audit. Next, so consideration specific to smaller entities. In smaller entities, the control environment, smaller entities often have a different control environment. Like governance roles may not include outside members. Same person is management, same person is top management. In some cases, governance is handled directly by the owner himself. Control activities in smaller entities are typically not formal, they are less formal. So there may not be documented, no documentation will be there. So who are related parties, what transactions happen with them, there won't be any records also. The owner may either mitigate by full active overseeing or potential increase through involvement of related party transaction. So what is the audit approach in smaller entities? For these smaller entities, auditor may obtain understanding of related parties by inquiring management, observing management oversight and review activities, inspecting relevant documents. So in smaller entities, auditor have to ask direct management who are the related parties, observe how they are having control on the financial reporting, inspect relevant documentation. In straight away, this itself can be asked as a 5 marks question. That's it. Okay. So that's it. With this, related party 550 standard is also over. Now let's do a quick revision of audit sampling standard 530. This particular revision you need to watch only after you finish the actual lectures of the sampling, or at least revision marathon, if at all I uploaded on the YouTube. To best of my knowledge, on 530 I didn't upload any revision marathon, but my old previous marathons were on 530. So even if you watch that, you will be able to decode this. Okay. Now, so audit sampling, the structure of the entire standard from the GOAT notes is maintained here in the chart notes also. So introduction to the sampling, first one. Earlier, we used to check all the transaction which is economically wasteful. Now, routine checking, that's called actually routine checking. Routine checking means what? Extensive vouching of all the entries without considering the concept of materiality. Whereas as the time passed by, there is a change from routine checking to checking of internal controls, checking of principles, checking of processes. Effective internal controls have reduced frauds and errors. In many companies, controls are implemented so strongly where the frauds and errors have been reduced. Therefore, auditor has to now decide extent of checking determined by auditor's judgment. Yes or no? So remember, ultimately the auditor's objective is to give opinion on the financial statements. And remember, auditors, is it compulsory for us to use sampling? No. Is it compulsory for us to apply sampling technique? No. But practically we have a limitation. We don't have an option. Yes or no? So, and whenever you are applying sampling, you should rely upon recognized sampling techniques like stratified sampling, simple random sampling, all that. Statistical sampling is scientific, reliable, and allows a fair opinion without checking all the. This is introduction to. In exam, they might ask you, write about introduction to sampling. Then next, what is the objective of auditor? What is the objective of auditor? What is the objective of auditor? The objective of auditor is what? First of all, audit sampling means what? Meaning, applying audit procedures to less than 100% of the items. 100% of the items is called as population. Less than that, if you are applying audit, then that is called audit sampling. What is the objective as per this standard? Ultimately, to obtain reasonable basis. See, you are verifying sample in order to draw reasonable conclusions on population. So SA 530 applies whenever audit sampling is used for audit procedures. So sampling approaches, we have two approaches. One is statistical and non-statistical. So what are the key elements in entire SA 530? What SA 530 is addressing? What SA 530 is covering? It talks about designing and selecting sample. It talks about performing test of controls and test of details using sampling techniques. It talks about evaluating sampling results. Yes or no? At the end of the last video in the sampling topic, we clearly discussed this entire chapter structure. Next. Now, what do you mean by population? And what are the characteristics of the population? Population meaning, okay, fine. Population characteristics directly. Population means all items in the, all items, all sampling units put together, we simply call it as population. Now you look at here. Meaning, population must be relevant to specific objective. By the way, characteristics are three. Appropriate. Population must be appropriate. Population must be complete. Population must be reliable. Appropriate means what? It must be specific to the audit objective. Like appropriate population, relevant to population, nothing but. If I want to check existence, actual transactions recorded. If I want to check completeness, supporting records. Remember that example? Purpose. Procedures applied on sample. Example, testing, 1 minute. What is this? Yeah, testing accounts receivable. Actually, this is a shortcut of the example. Testing accounts receivable overstatement, or you can say testing sales overstatement. Here instead of AR, you can also use the word sales. If you want to check sales overstatement, use actual receivables testing, listing, actual sales recorded. Suppose you want to test understatement, you need to verify not recorded one, but you need to verify supporting items like payments, stock registers, like that. Yes or no? Completeness. You must include all items throughout the entire period, throughout the entire audit period, for which year, whatever the year we're performing the audit, all the transactions must be included. Only then you need to select sample from. Yes or no? Then reliability. Population must be sufficiently complete and accurate. Auditor has to perform certain procedures to ensure reliability. Whether the population is reliable or not, first I will have to perform controls, evaluation, all that. Then auditor must obtain evidence about accuracy and source. How do you know whether this is accurate? What is the source? Then if population is not reliable, sample will not be relevant for audit objective. Sampling unit. Individual items in population is called as sampling unit. Audit processes will be applied on selected sampling units with conclusions projected to entire population. Sample conclusions is equal to population conclusion. Whatever conclusion we get on sample, the same conclusion we take on the population. Suppose if sample conclusion, and if at all I check entire population separately once again and gets a different conclusion, then the sample is not representative. This is called sampling risk. Yes or no? Then for trade receivables, sampling units can be customer balances, sales invoices, all that. Next, approaches. Types of sampling. There are two approaches, statistical and non-statistical. Auditor decided which approach to follow. And remember, sample size is not a differentiating factor between these approaches. Statistical, random selection, probability theory, we measure sampling risk reliably, we employ mathematical or statistical methods. Non-statistical, which does not have the features of statistical sampling. Then ultimately, whether you follow statistical or non-statistical, all that is unnecessary. Your sample must be representing all the characteristics of the population where the sample risk will be low. Yes or no? So representative sample should be mirroring the population. Sample should closely mirror the population, represent the population. Sample size must be sufficient so that you will get a meaningful result. So sampling process, we perform on test of control, we verify test of details. Why are we verifying controls? To find deviations in control so that our risk assessment will change. Okay, why do we perform test of details? To find misstatements. Yes or no? Able to recollect? Next. Now, difference between statistical and non-statistical, it will be similar, which we already saw just now. So there won't be much difference even if you read also. Now, how sampling is different from traditional methods? From traditional methods, auditor will get a better satisfaction. Auditors can gain sufficient assurance with less checking using sampling, as even 100% checking cannot give you absolute satisfaction. Randomly chosen samples reflect all the population features. Sample reliability depends on effectiveness of control. Test of control, sampling assess control effectiveness. Strong controls permit smaller samples. Sampling is an estimation process with obviously some errors. Yes or no? Acceptable error tolerance is based on auditor's judgment. Tolerable error, nothing but. Factors for extent of checking on a sampling plan. What factors? Size of the organization, internal control state, books and records, tolerable error, desired confidence. Easy. Next, advantages of a statistical sampling. What are the advantages? Not proportion to the sample population size. Sample size need not increase in proportion to the increase in population. Sample size is objectively we select the sample. With a minimum sample size, we can calculate risk. We can calculate with precision. Estimates probable difference. Reduces clerical processing. No sampling, low non-sampling errors. Scientific and reliable. Any 3 or 4 points you can write in exam. Then, when not to use sampling, 100% accuracy required for you because of legal requirement or regular requirement, whatever reason, then you can't use sampling. Technical knowledge gap, nothing but you don't know how to use a sampling. Insufficient sampling sampling skills. Better alternatives. There are more efficient ways to do. Suppose their small population size is very small, 100% verification gives you more clarity, then go with that method. Requirements as to sample design, sample size and sample selection. Sample design, consider the audit purpose, existence, completeness, valuation of what exactly you're checking, and population characteristic, heterogeneous or homogeneous. Sample size must be sufficient to reduce sampling risk to an acceptable level. Sample selection, ensure that every item in the population has a chance of selection. See, it may be equal chance, it may be unequal chance, doesn't matter, but everything should have a chance of selection. Then only that selection method is proper. Next, factors while choosing sample design. Purpose of audit. Yes or no? Purpose of audit. I think here just a minute. Yeah, I think both are right. Purpose of audit procedure, here you can simply strike off this, not required. Okay, you can strike off that, you can just keep this first point. Purpose of audit, nature of evidence you want, and what constitute misstatement you should first define, and test of controls and test of details. SS expected rate of deviation to determine sample size. Evaluate expected misstatement level, all that. Factors that we will use while using sample design. Here, no, better refer GOAT notes once, because this even if you read short notes material, you may not get sometimes the clarity. So better read GOAT notes material. Okay. Next, stratification, dividing the population into discrete. Discrete means nothing but different strata, different subgroups. Stratification improves audit efficiency. Objective, samples from all population segments. Monetary value, often uses monetary values for test of details. Stratum specific projection, obviously in a stratification, we project to stratum, then all the stratums we total, that is what combining all the stratums projection, correct? Next, value weighted selection. Monetary amounts, sample design prioritizes monetary amount, sample size, sample selection, everything is expressed in monetary terms. In case of test of details, individual monetary units will be there, right? They are nothing but monetary units, value weighted selection. In a value weighted selection, the focus is on larger values. Larger value items will have a greater chance of selection. Even if it is higher chance of selection, the sample size will be smaller. And it is best to use it with random selection. most efficiency with random selection. You can also use with systematic sampling also. Stratification, you can evaluated selection, you can apply even in interval sampling, block sampling also, but it is best with random sampling. That's why monetary unit stratified random sampling. Next, sample size and factors affecting them. Sample size. Auditor decided sample size to reduce sampling risk. Lower the risk, larger the size. So sample size is decided by formulas, scientific formulas and professional judgment. Factors for test of control: more assurance, higher expected rate of deviation, higher desired assurance the auditor want. These are various factors. Yes or no? Expected rate of deviation, auditor's understanding of the business, personal changes, prior audit results, all that remember. Next, factors that will decrease the sample size. Here no factors that increase the sample size. What factors decrease? You have higher tolerable rate of deviation, you can decrease the sample size. Population size on sample size decision has a minimum impact. Yes or no? For smaller population, sampling is not efficient. Next, then we have factors. Yeah, factors for test of details. The test of details objective is to detect MMS. Factors increase sample size, higher risk of MMS, higher expected misstatement, higher desired assurance than that tolerable misstatement is not exceeded by actual misstatement. Not exceeded by actual misstatement. That's actual complete sentence. Clear? And what factors will decrease? Greater reliance on other substantive. Suppose if you're relying more on other substantive, automatically test of detail sample size will decrease. Higher tolerable misstatement, sample size will decrease. Stratifying population with wide range of, like if you're stratifying with wide characteristics the population, you can reduce the methods of sample. Simple random sampling, equal chance for every unit, uses random numbers to avoid bias, ideal for homogeneous population. Stratified, divides heterogeneous population into homogeneous strata, subpopulation, samples drawn from each stratum. Auditor determines the number of stratas. Example, different percentages for, varying balances range up to 5 lakhs, up to 10 lakhs, how much percentage you should select, yes or no? Yeah. Systematic, sampling interval based on population size. Starting point will be random. Must avoid patterns aligning with some set of transactions, remember. And caution, risk of unrepresentative sample if interval is matching with some hidden pattern. That's the risk here. Next, monetary, evaluated selection where evaluation is completely based on monetary amounts. Haphazard sample, no structured approach. And auditor will be avoiding bias, by the way, but this is not statistically superior. All units will have a chance of selection, whereas in simple random sampling, equal chance of selection will be there. Yes or no? Next, block sampling, selecting continuous items, adjacent blocks, limited coverage of diverse transactions, simple, economical, but prone to bias. Example, taking a block of invoices. Easy. Next, sampling risk, meaning when auditor's conclusion from a sample differs from what would be found if entire population were tested. If at all entire population is tested, what we will be finding that may not be matching with the sample related conclusion, then that risk is called as what? Sampling risk. In case of test of control, over reliance, under reliance, yes or no? Over reliance means what? Controls are not effective, but you are treating it as effective. Audit risk increases. Under reliance means what? Controls are effective, but you are treating them as not effective. Because of it, audit efficiency affects. In case of test of delays, incorrect acceptance. Incorrect acceptance means what? Concluding that there are no mistakes when they actually exist in the population. Incorrect rejection, concluding that there are a lot of mistakes and rejecting population that it is wrong, when in fact there are no material misstatements. Non-sampling risk, risk that auditor reach erroneous conclusions for any reason other than sampling risk. Non-sampling risk cannot be measured mathematically. Examples, use of inappropriate audit, misinterpretation of audit evidence. Causes of non-sampling risk, human mistakes, misinterpreting results, relying on erroneous information. Finally, you need to perform procedures on sample. Apply appropriate procedure to each item selected. If a procedure is not applicable, perform it on a replacement. If replacement is not feasible, apply an alternative procedure. If procedures cannot be applied, treat the item as deviation in case of test of control, treat the item as misstatement in case of test of details. Next, nature and cause of deviation. Generally misstatements and deviation reasons, they will be common across various deviations, various mistakes. Generally, in various transactions, a deviation is common, misstatement is common. Individually, most of the mistakes are related to each other. Evaluate nature and cause of the misstatement. If at all there is any anomaly, you need to have high degree of certainty that it is non-representative of population. So additional procedures are important. Anomaly is equal to misstatement or deviation demonstrably not representative of population. Next, in charts, no. Generally, personally, I don't recommend charts concept itself, but just for getting an overview. That's it. This is not at all, I personally tell everybody, this is only for an overview, not for depending on the exam purpose. This is just for overview, so that, okay, fine. Like instead of reading from goat notes, some 7-8 pages, here it in 3-4 pages, you can revise it. You will get a bird's eye view. So just for a quick recap of headings, side headings, brief matter. But for descriptive purpose, you read only that. Goat notes, always. Projection. Auditor project misstatement to population for a broad view of the scale. Remember, projection may not determine exact amount for recording in books of accounts. Correct? Exclusion. Anomalies will be excluded from projection. Effect of uncorrected misstatement is considered along with non-anomalous misstatement. Non-anomalous means nothing but projected. Yes or no? Next. For test of control, uncorrected misstatements has to be projected. Yes or no? For test of test of details. For test of controls, no projection is needed because sample rate of deviation itself is population rate of deviation. Evaluation of sampling results. Auditor evaluates whether sample provided reasonable basis or not. High sample deviation increases material misstatements. High sample misstatement indicate material misstatement. Best evaluation is what? Projected plus anomalous. Both you need to consider and then evaluate. Correct? Anomalous misstatements are non-repetitive but included in aggregate calculation for total misstatement purpose. When projected misstatement plus anomalous is crossing tolerable, we assume that sample is inadequate. Remember, I told you this is written on a precautionary method. When projected misstatement is more than auditor expectation, then also unacceptable sampling risk is there. We assume that sampling is wrong. We increase the sample and we will once again do this. Conclusion. The closer the projected plus anomalous to the tolerate, the more likely actual misstatement is more than tolerable level. If sampling has not provided adequate basis, this is what if management will argue, then I will ask management to investigate and I will do extra procedures. I will test alternative controls. I will modify my substantive. And there are certain precautions which I should take when I am performing test checking. What precautions I should check? Study accounting system, internal control system, identify areas which are not suitable for sampling, plan and explain methods to the staff. I determine adequate sample size, select them without any bias, analyze the errors correctly. Analyzing means what? Nothing but anomaly, non-anomaly, all that. Yes or no? Stratify the transactions and balances appropriately so that you will get the representative sample. Able to understand. But remember, you will get maximum out of the chart book only when you understand the subject thoroughly. Otherwise, without understanding the words, without understanding it, there is no point of reading this. Are you clear? Now here, I think we found out one mistake in the chart notes where factors. Yes or no? Here, side headings were right. This matter was not given correctly. Correct? This I think was copy pasted. This one. Okay. These 2 points, please replace it. Even in the physical chart copy also, please ignore this. You can just use headings. That's enough. Clear? That's it. So refer goat notes. Confident? Actually, why these mistakes happens is, we do develop entire this in Canva. What happens is multiple team members will be working. Sometimes no. For example, when we are working, somebody else also would have opened the same topic. When we saved it here, they would also saved some settings there in different file. This got missed, that got saved. When they bring it for verification, getting it, or when I am verifying, I will verify based on my system. When they verify, I will tell them, okay, approve it. Then they will take that and they will give me entire PDF just for my review. Since I reviewed already, I approve it. Getting the point? I'll review. Of course, I'll review because I reviewed here. Once again, the same I'm reviewing with PDF. Getting it? I review it. So that is the reason. The sync mistake is actually a syncing mistake. But if a chart book has to come this beautifully, we don't have another option. Only Canva we need to use. Canva or some other software only we need to use. You understood why this is actually a synchronization mistake. Synchronization. We would have actually updated this. So at 4 or 5 places this mistake happened, this entire book. But next edition what we will do, whatever we did proofreading on the screen, off the screen we should take a print and then read once again. So proofreading will be done 4 or 5 times at least. In spite of it, you see this very minor, no, we can't notice that in this much volume of syllabus. Okay, at 4 or 5 places only this mistake happened, but at least, and one more thing, when we are reading normally proofreading, we will not get it, because the intensity of reading is different. But when I'm taking a class, that intensity level is different. I can easily figure out a mistake in a class. Rather, if I'm sitting this book, if you give me this book, see, is there any mistake, is there, I can't find out easily, because that intensity won't be there. Fine, clear all of you? But you see how cleverly this represented entire matter, no? Same wordings we try to maintain at 2 or 3 places only the wordings might be little different in the chart notes, but 99% we try to maintain it. That's it. So with this, essay 530 is completely done. Clear, confident? Totally we hardly covered 4.5 hours including this chat discussion. So next we'll start 520 standard. 520 will be little easy only compared to 530. It's quite easy. Yeah. Yes. Let's begin essay 520 analytical procedure chart revision, and as a prerequisite for every topic I will give an intro like this. You have to first watch my previous marathons on 520, get some understanding on 520, or if at all you already watched my EO batch, then you can listen this particular chart revision, because in chart revision it's all about a quick revision. It quickly revise. So you don't expect too much of explanation from the chart revision. Okay? It is like brushing up of all the concepts briefly. Next, analytical procedure, meaning and objective. So what is the meaning of analytical procedure? You evaluate, just a minute. So you evaluate financial information by analyzing relationships between financial and non-financial data. That's the meaning, correct? Then what is the objective? To obviously get the evidence and use substantive analytical to form overall conclusions at the end of the audit. Okay, whether financial statements are consistent with auditor's understanding of the entity, to know that analytical procedures are performed. Now in analytical we analyze the data between financial and non-financial, right? And what do we find? We find fluctuations or inconsistent. That what we need to do, investigate. When do we do investigation? When the difference is more than acceptable difference, correct? What is acceptable difference? We already discussed. Once again we'll get it later. Next, examples, it's okay, not required. Then analytical procedure will have 2 types of analysis. One, comparisons. Another type of analysis is consideration of relationships. Comparisons 3 types: comparison with prior period, comparison with anticipated results like budgets and forecast, comparison with industry information, and trying to find out inconsistencies, differences, fluctuations, variations. Next, relationships, predictable pattern, like compare relationship within financial elements which are expected to follow predictable pattern. Sales we can predict, purchases we can predict. If both can be predicted, closing stock can be predicted. Yes or no? Some expenses, repairs and maintenance we can predict. Some expenses like advertisement research we can't predict. Okay, then financial and non-financial. In analytical we use relationship between financial and non-financial. For example, there is an increase in number of employees, there must be increase in sales. If that is not happened, we will investigate the fluctuation. So analytical procedures use comparisons. Analytical procedures use relationships between financial and non-financial data. Next, purpose. We use comparisons. Ultimately we compare or we study relationships, yes or no, to check what? Whether account balance is looking reasonable or not. Yes or no? So because of this comparisons and relationship study, we will identify unusual transaction, unusual mistakes, unusual manipulations, all that. Correct? Suppose unusual transactions you found. What is unusual transaction? Events, amounts, ratios, trends, whatever that will signal some risk of MS. So analytical procedure benefits the auditor to identify unusual items. Analytical procedures will benefit the auditor to identify risky areas. So in this way analytical procedure will be useful to the auditor. Next, various examples, any 4 or 5 examples you have to study. I already told in the GOAT notes that particular EVO session also. Next, timing. When should we perform? We can perform it in planning, testing and completion. But most importantly, analytical is performed in planning stage. During the planning phase, it will help the auditor to identify potential mistakes. Benefits. This, it will help you to decide nature, timing, extent of further audit procedure. Means analytical procedure will help you to plan your audit. Yes or no? An analytical procedure at the time of planning uses both financial data and non-financial. Correct? Now, what is substantive analytical procedure? First of all, substantive procedures includes two: substantive analytical procedure, test of details. Both are part of substantive procedures. Substantive analytical is applied when the auditor judges it can reduce the risk to acceptable level. If auditor feels that analytical procedure will reduce the auditor, he will use it. Enquiries. So what auditor will do, before substantive analytical procedure is performed, first auditor will inquire about the data regarding its reliability and availability. Once data is given, auditor will perform analytical, then he will get some result. That result he will investigate, yes or no. And sometimes auditor will also use entities analytical procedure data also. And so that is used, management data he will use when it is reliable, yes or no. Next, what are the factors for substantive analytical? Remember, in ICA book this was used as audit, substantive audit, but actually it's wrong. It's actually substantive analytical. Can I use substantive analytical procedure or not? It is determined by various factors. One, first to know data availability. First, data should be available. Two, data must be disaggregated. Three, account to type. Substantive analytical is useful for more of income statement items, not for balance sheet items. And not only that, source of the data, yes or no. And a significant class of transactions where judgment is involved, it is less suitable. Those transactions which are routine, which are predictable, good for substantive analytical procedure. Correct? Predictability. Effective, analytical procedure is effective where relationships are predictable. Analytical procedures are best when for checking completion valuation, less for rights and obligation, existence and all. And if risk is high, use test of details. SAP alone may not be. See how best it is, like the goat notes, whatever is there, we are able to figure out all the keywords, yes or no. But if you want to understand better the chart notes, you need to read from goat notes. Next, what are the techniques of substantive? Trend analysis, ratio analysis, reasonableness test, structural modeling. Trend analysis, we compare current balances with prior period to spot unusual changes, unusual trends. Check if figures align with known trends, whether figures are matching with trend, known trend or not. Ratio analysis, we study relationship between various account balances, transactions. Correct? We detect mismatches by comparing ratios across time. Reasonableness test, no, predominantly use non-financial data to know whether an account balance is logical or not, reasonable or not. Helpful for accrual of income statement, whatever. Anywhere you can use this reasonableness test. Next, structural modeling, it's a statistical tool where they predict account balances. Easy or not? Any three you need to write in exam. Can we use analytical procedure as a sole substantive procedure? It depends upon suitability, it depends upon reliability of the data, it depends upon accuracy of the expectation, it also depends upon acceptable difference. Now, auditor must assess if analytical procedure is appropriate for a particular session based on risk of MS and test of details. Yes or no? Data must be evaluated for source, comparability, relevance, controls. Auditor then develop the expected value. See, for this, we have J, K, L, M. These are the points which are talking in depth about these four. So this is typically a consolidation of all the four subsequent points. The subsequent points we'll see. Suitability of a particular analytical procedure for a given assertion. SAP works best for large volumes of data, correct? Which can be predicted over time. Yes, analytical procedure we can apply on an assumption that relationships will exist among various data and depends on effectiveness of detecting whether a particular analytical procedure is suitable or not. It depends upon how effective it is in detecting material misstatement. SAP, substantive analytical procedure, is it suitable? It depends upon its ability to find mistakes. Predictive, even a simple model can be effective sometimes. And remember, analytical procedure offer different levels of assurance and factors influencing suitability, nature of assertion, risk of MMS. Sometimes SAP analytical procedure is stronger when you are using with test of details for certain assertions. For same assertions, test of details. SAP plus TOD for same assertion, that will give you a stronger result, that will give you more clarity. Able to recollect? Next, factors determining reliability of data. What are the factors? Source. Source is more reliable when it is coming from independent source. Comparability, data must fit the entity's context. Like for example, broad data, industry data may not be suitable for entities specialized in specialized products. Reliability, more reliable if expected outcome Like for example, if budgets are for expected outcomes, budgets are really seriously taken, then only that is more relevant data. Controls over preparation of data. You need to test how well controls work, and you should also test controls over non-financial data. So if controls are effectively working, then the result of analytical procedure will be more effective. Then auditor has to evaluate whether expectation is sufficiently precise. Precision improves when expected results are predictable. Like expected results must be predictable, only then the accuracy will be there. SAP, analytical, is more effective when applied to disaggregated data rather than consolidated data. And design of SAP depends upon availability and reliability of financial data and non-financial data. Amount of difference that is acceptable. What do you mean by amount of difference that is acceptable? The difference between recorded amount and expected value. Expected value means what? Result of analytical procedure. What is the result of analytical procedure? Some expected value you develop. That value you compare with recorded amount. If there is a difference up to a certain level, we can accept it without any further investigation, and that level is called as acceptable difference. Yes or no? It is influenced. The acceptable difference is influenced by materiality, level of assurance, risk of MMS. Higher the risk, more evidence is required. Therefore, lower acceptable difference without investigation. If high risk is there, difference, acceptable difference size will decrease. As risk increases, acceptable difference decreases. That's what actually I told you to slightly rectify. That one letter, if you rectify, that will be enough. Goat notes I told you, yes or no? That's it. To ensure sufficient, appropriate audit evidence. Then, finally, if at all auditor identify fluctuation, relationships differ significantly from expected value, where the fluctuation is more than acceptable difference, what auditor first will investigate management. We will ask them why there is a fluctuation. We will see the response given by them. If response given by them is not adequate, auditor will perform additional procedure to detect any material misstatement. Finally, overall conclusion at the end of the audit. What? To corroborate conclusions from audit of financial components. See, I will do overall conclusions to support. Okay, whatever my understanding of the entity and its environment, analytical procedure will corroborate me, support me, helps in forming reasonable conclusions, may uncover. Because of this overall conclusion at the end of the audit, you may discover unrecognized risk earlier. Yes or no? If at all you identify any unusual items at the end of the audit, you have to revise the risk assessment, you have to modify further audit procedure, again you redo it. That's it. Analytical procedure is done. It took hardly 11 minutes. The original chapter we discussed 1 or 40 minutes close. Original, the standard. Understood? Able to recollect, no? But you read once again, goat notes, thoroughly revise, then come back and see. It will be like a quick recap. This is only for mind mapping. Like in exam, if a particular question comes, at least if you get a diagram, that keywords, you can write at least something without missing any points. Just for retention purpose only, this one. That's it. Minimum retention purpose.